the potential risk of attack from Iran by surface or aerial drones, shipping will do that.
Okay, and then Sal, let me ask you this, because right now when we think about supplies, often we think about oil, right? And that's why we've been seeing oil at elevated prices. But I wonder if we'll see any ripple effects like we saw during or as a consequence of the pandemic with supply chain issues. You mentioned cars being stuck at sea. What's the ripple effect that you see?
The black rose may have...
I think the biggest ripple effect that we're seeing right now is the price of bunker fuel, the fuel that we use on ships. That fuel is double, it can potentially triple right now, which means everything moving around the planet is going to become more expensive by ship. We're already seeing shipping companies incurring surcharges and trying to pass them on. Now in the United States, the Federal Maritime Commission, Laura DeBello, the new chairman, is pushing back against that, having the shipping companies show proof that the surcharges are legitimate before enacting them. But we're seeing that. We're seeing shortages in aviation fuel. That is causing, again, increased aviation costs for air cargo and for air transport around the world. And this is the big thing I think that people haven't seen. What we've seen so far is the initial shocks from the disruptions. Now we're starting to see the visible shortages. Saw a graph earlier this morning talking about the amount of oil, both ashore and afloat, in millions of barrels. And what's interesting is we're still above normal levels with the amount of oil ashore and afloat. But the scary part of that graph to me was the decline, how kind of very precipitous that drop was. And it was dropping at a very big level. What we're doing right now, for example, in oil, is sucking out what oil is available afloat, what we're hitting into the strategic petroleum reserves. But that disruption coming out of Hormuz, for example, a lot of people are talking about, well, we're getting oil out of Yanbu, that West Coast port for Saudi Arabia. We're only getting 4.5 million barrels per day out of it. Again, the pipeline can handle 7, but the port facility can only handle 4.5 million. So we have problems. All the empty oil tankers heading to the United States. Everybody's talking about 60 very large crude carriers heading to the United States. We're exporting right now about 4 million barrels per day. We can ramp up to potentially 5 million barrels per day. A VLCC holds 2 million barrels. So if you have 60 VLCCs heading to the United States, you're going to need 120 million barrels of fuel. We may not have the capacity to ramp up fast enough to fuel those vessels, let alone the fact that a very large crude carrier sailing from Houston, Texas to Shanghai takes twice the amount of time to get there than one coming from Saudi Arabia. 52 days versus 22 days.
It feels like both sides would have an interest in seeing an end to this sooner rather than later. What's your take?
I believe so. I think one of the reasons that the Trump administration is pushing the blockade right now is to put economic coercion against Iran. If Iran cannot export oil, for example, it's going to fill up its shore facilities, it's going to fill up its tankers. But if it reaches a point where it has no more capacity left, it's going to have to start shutting down wells. And that's a major issue because it's going to take time to restart that. So they're trying to use economic coercion against Iran. I'm not sure economic coercion is going to work against Iran because it's always hard to judge how an administration or regime is going to react to this. The world has a bigger cushion than Iran. That's, I think, part of the economic play here. The U.S. can absorb these hits. Even with the precipitous drop in the amount of oil afloat, there's still large amounts. The problems are going to materialize in the kind of the haves versus have-not nations, the developed versus the undeveloped. We're going to see more push and shortages for commodities in those regions. Those long-term issues I talked about earlier with fertilizer not getting into the ground and lower food yields. Remember, we're already having disruptions caused by Russia and Ukraine over the past 3 years in food, fuel, and fertilizer. Coming out of the Black Sea, we still have disruptions in the Red Sea. Now we're having it out of the Persian Gulf. This has been a cumulative effect on issues of freedom of the sea and our ability to freely move cargo around. You're also seeing a realignment of trade patterns. I mean, Australia, for example, which was sitting there with just over 30 days of fuel available to itself, had to kind of scramble, and it's made a deal now with Japan and South Korea. So you can see a realignment of geopolitical alliances, economic alliances, and even trade lines changing around here. We're seeing a massive investment in shipbuilding over into China for tanker companies. They've got money in their back pocket, they're spending it to get new tankers. So we're seeing a shipbuilding production very much like we saw with container ships during COVID. So again, the entire market is in a state of flux right now. And I think the economic coercion here is trying to get Iran to turn first. The problem with a game of chicken is both sides tend to lose it.
When we think about what data points you'd be watching to see that the crisis is easing, that we're on a path to unwind, what would you be looking at? Because I know that you said in some of your commentary before that both sides thought, it seems like that your thought was both sides thought this would end sooner than it has. But what would you be looking for to see an off-ramp?
Well, let me say this on the positive side. We're talking about 20% maybe of global trade. This is affecting the other 80% is working. And this is a key thing, is that global trade finds ways to work. Even when the Suez shut down for 8 years in 1968, we developed, ships, the very large crude carriers, the ultra-large crude carriers to deal with this. Shipping, shipping is like water on a sidewalk. It'll find cracks. It'll find ways to work its way out. I'm watching several things right now. Obviously, I'm watching how this redistribution of shipping is working, how we're realigning. Watching Russia very closely. If there's a country that's benefiting out of this situation right now, it's Russia. Europe has talked about cutting itself off from liquefied natural gas from Russia at the end of 2027. It's been trying to wean itself off Russian energy now since the invasion of Ukraine. We're seeing those sanctions being eased quite a bit. I think there's a realization that when you use economic sanctions and economic coercions, they don't always work out the way you want them to do. One of the impacts of the G7 EU sanctioning Russia after Ukraine was the creation of the dark fleet, this parallel fleet that's operating on the world's oceans outside the bounds of normal shipping. I think this is raising a lot of concerns. Keir Starmer having that meeting in the UK with about 30 nations that use the Persian Gulf, I think is very key. That you may have your issues with President Trump and his policies. However, it's very essential that the global economic system stabilizes itself. And I think there's a lot of concern that this war is destabilizing it. And I'm not saying we've reached, a point of no return by any means. I think that there's realization, there's discussions going on. I think the fact that the U.S. and Iran are meeting for the very first time since the 1970s is a good thing. And I always go back to this issue with President Trump. He uses economic levers and mechanisms all the time to achieve political goals. We saw that with the tariffs, and now we're seeing it with this blockade. So I'm always looking at what other things the president and his administration is looking to do. I am concerned that this could lead to escalation, it could lead to further bloodshed, but the U.S. Navy and the U.S. military is some of the best trained and qualified people in the world out there, and if anybody can do it, it's them. And I'm always thinking about those merchant mariners who find themselves caught between these opposing forces.
All right, Sal, thank you so much for your insight. Great conversation. And I know your usual viewers who are used to seeing in your Hawaiian shirt, see you brought it with a blazer today. It's a combination. That is Sal Mercogliano, maritime historian at Campbell University, a host of What's Going On with Shipping. That's going to do it for Market Overtime. I'm Diane King Hall. Be sure to download the Schwab Network app and subscribe to our YouTube channel. Tune in 24/7 on schwabnetwork.com. Thank you so much for joining us.
Forgiveness? Never. Welcome to Market Matters. I'm Marley Caden. Each week we are stripping away the noise to focus on the big picture economic themes that could have a place in your portfolio. Today we're heading to the final frontier. For years, the space economy felt like a tomorrow story, too speculative, too capital intensive, and frankly, too hard for the average investor to access. But that is changing. NASA just brought its Artemis 2 crew home after a historic lunar flyby, and reports are swirling that SpaceX has confidentially filed for a $2 trillion IPO. But since it remains private, the big question for investors is where do you actually get exposure? And with Artemis's recent success, what other areas of the industry will become investable? Joining us to break it all down is Andrew Channon, the CEO of Procure AM and the man behind the UFO ETF. We'll discuss what's real when it comes to space, what's actually investable now, and where this industry could be headed next. Andrew, thank you so much for joining us today for our first episode. Last we spoke, I said I could talk to you for a lot longer about the space economy and the space sector, and now we're getting to do that. So I'm so glad you're with us, and what perfect timing too, because let's just start with the potential giant elephant in the room, the SpaceX IPO. We've now got these reports that they have their confidential filing for their IPO coming up in June. If that does go through with a $2 trillion plus valuation, does this immediately move space into a core sector for institutional investors from what I think now is potentially a thematic need?
It certainly feels like it. We're talking about a company that, if it IPOs at the levels you just mentioned, will instantly be one of the largest publicly traded IPOs ever. And those are some pretty big metrics. And then on top of that, you're hearing from index providers around the world about finding ways for early inclusion of this name into various indices. To the extent that everything plays out like we've just discussed, SpaceX could be a major part of investments for people, whether they're in a broad-based investment index or something even more specific like an ETF like UFO.
And right now, if you're trying to get some space exposure, you're often buying one of these legacy defense names where space may be a small portion of their revenue. If we see SpaceX go public, does this become the tide that lifts all boats, or do you see it more as sucking the air out of the room for the smaller players?
It's tough to say. If you look at what we've seen across the space industry, especially the publicly traded space industry, since the early rumors in December of last year to more kind of formalized discussions about what to expect in the months ahead, we've seen the broader publicly traded space industry has been very positively exposed to these rumors and this news. And so, is that investors using the currently publicly traded names as a proxy? It seems like the pure play names have done pretty well, especially compared to some of the more broad-based defense names that people were more traditionally would relate to the space industry maybe a decade or more ago. And some of that raises other questions. So if SpaceX does raise $75 billion or so, where will that money be deployed? Will it be focused on beating out Blue Origin for lunar landers? Will it be focused on building out orbiting data centers or some of the other projects that SpaceX has already been involved in? Would they look to acquire strategic companies? And if that's the case, many times we see that a certain industry is potentially in play for M&A. Sometimes that does, like you said, have that ability to raise all ships. And that could be potentially some of what we're experiencing over these last few months as far as the recent surge for some space companies. We've also heard other players such as Sam Altman claiming back in December before the SpaceX rumors came out that he was contemplating trying to build his own potential rival to SpaceX and would do so either by building organically, partnering with existing space companies, or acquiring them. So to the extent that an IPO that wasn't necessarily on everyone's radar only 6 months ago is something that's coming down the pipe, this might be something that pulls demand forward for potential M&A or for other services that could be provided by some of these space companies.
And Andrew, you bring up a great question there. What are they going to do with that capital and how are they going to deploy it? So when investors finally get a look at this S1, what are they really investing in here? Are we looking at an interconnectivity company that also happens to have rockets? Is this Starlink? Or are we looking at Starship? Is this a transportation company that has an internet side hustle?
Or is it an AI company? Or is it something that possibly merges with a electric vehicle company? We do not know. And I think investors are very excited to learn more. And these are all things that, hopefully will play out in the near future so we can get a better understanding of what investors will ultimately be getting once this company does IPO. But, from what we've heard, different conversations, even looking with XAI and Cursor and the recent announcements that we've been hearing about. This is still a space company. There's communications, but when you look at kind of the way that the world has evolved over the last many years, I mean, space affects pretty much every publicly traded company out there today. Whether it's part of their key focus or it's something that helps enable those companies to achieve the various goals that they're trying to do, space does touch pretty much everyone everywhere these days. And so what a space company may look like in the future may be different than what people have considered to be space companies historically. But these various capabilities could provide numerous potential revenue streams for the company. That said, some might have much more kind of a longer term path to profitability. Some might require a lot more upfront investment to build these out. Some might be pretty close to profitability. So, by having these many different areas that this company's involved in, certainly it exposes you to more risks and potentially capital needs. But maybe it also helps provide a smoother, less volatile path for the company in the future as well. And so we're going to need to see what those drivers are, what those expenses are, what the cash burn is. And so much of that becomes apparent once you have a company that's public instead of private. So I think you've got a lot of people that are running their own numbers and formulas to determine what is this worth and what is this. And one of the things that our index provider will also be doing is trying to determine revenues from space versus non-space revenue, because we do have this space ETF UFO to have space companies, but it also does classify some companies as so it will be very interesting to see what bucket SpaceX falls into. I wouldn't be shocked if we hear more news leading up to the IPO as well, as far as other potential areas that this company may look to deploy cash once they have more in their arsenal.
I have about a dozen follow-ups to everything you just said there, but I'm going to go all the way back to the very beginning of that answer where you said, or is it an AI company? And you mentioned orbital data centers. Now, Elon Musk had called those a no-brainer, hinted that we were going to shift data centers into space. Then we heard reports that in the confidential IPO filing, those may not be as commercially viable as initially we may have been led to believe. So I guess my question for you is space AI really a plausible concept, or are we just riding the hype wave here to juice up the IPO?
It is definitely plausible, and in my vision of the future as we become a more spacefaring civilization, I think all these things are possible, and AI and data centers and things like that. If we're going to be building out permanent colonies in space, are absolutely important. And so you have the first layers of infrastructure that need to be laid before you can build off of that, or before you can make these next iterations. But in many kind of cases of how we look to build out places like the moon and potentially Mars, it's not necessarily sending people first, but you're sending out equipment, machines, robots, drones, autonomous technology, things like that. And data is very important. Communications is important. For many of these, AI will also be very important. So to be able to build this out and do it in a way that can hopefully minimize exposure for human risks in space before humans get there, if we can be utilizing all these capabilities, that can be really important. To the extent that we do build out this infrastructure and we do start expanding into the cosmos, absolutely data will certainly be important. Now, can we come up with better, more efficient, less costly solutions that we can deploy here on Earth before we start building out orbiting data centers? That's also possible. So to the extent that they put all their eggs in that one basket, that could be a pretty risky. However, it's certainly something that I think it justifies more exploration and research to the companies that are able to do it first and are able to do it efficiently and effectively, and not blow through all their capital. That could be a huge opportunity for them. And if you look at Starlink, years ago, many people thought it was crazy, and through a lot of engineering and a lot of redrawing of plans, and also having their own launch capabilities in house, look at Starlink today. I'm a happy customer, and it's something that we're seeing get deployed throughout more households and businesses around the country and world. And that's something that I think many people thought was maybe a far-fetched idea. And we're starting to see it's becoming a pretty real business. So, maybe the plans haven't been fully drawn up yet, but to the extent that they put the time and work and research into it, hopefully they are able to turn that into something that can be a strong revenue driver for the company.
So as we know that a lot of these space names were once considered speculative plays, they were sort of looked at as almost like a science project for a lot of the names. But you bring up a great point. Now they're fully functional companies offering fully functional services in real time with real use in a daily basis in our lives. As far as what's most investable in the space right now, I mean, the space economy is more than just us being up in the cosmos. Where are you seeing the most opportunity right now?
Until it snaps.
For decades, communications has been, predominantly the largest driver of the broader space economy, and that's something that has still held a very strong portion of the overall space revenue pie. That said, as we see kind of more plans for companies, governments, and beyond reaching to the stars, they are starting to incorporate more space-related ideas. So things like the military and defense, we're seeing governments start to allocate a lot of money because they've recognized that space is the new strategic high ground for militaries. So, one of the other important parts of, once you decide that you want to have space assets, how do you get them into space? So that's where launch comes into play. So communications is something that's been around for a while. Launch seems to be, heavily growing, and to the extent that we have an FCC that is forcing companies to get a certain amount of satellites up that have been approved by the FCC by a certain date, or else potentially forfeit the other allowed satellites that you're hoping to launch for constellations. That's causing to have to figure out how to really specification of the fire company. So some of these things are getting pulled forward as we realize that there are real time deadlines that companies need to be complying by, and there's only so much by way of launch capacity that's available. So these are some of the earlier high demand growing industries that we're seeing: military defense, launch capabilities, communications. But as we start to build that out, more permanent infrastructures, first on the moon, we're going to need a lot of capabilities, resources, infrastructure as well. And building out that infrastructure in many cases is what's going to help us leap to the next technological breakthrough as well. So we're really excited to see where that goes. But there are already investable areas, and we're only limited by our technological capabilities.
And I'm glad you brought up the moon, because we're also on the heels, weeks out from the successful Artemis 2 lunar flyby, and the space race absolutely smooth. We saw China say they were going to land on the moon by 2030, but think about the infrastructure that's needed. You say it has to be there before we can actually put human beings on the moon. We can fly by. There's nothing there for them right now. So as far as we look at the infrastructure and how you would play that, as we've sped up the timeline here, we've got one country, a dominant competitor here, giving a timeline. Do you have risks about the increased urgency now to get there first and be there first? The first to arrive is the first to win, I suppose, here. And does that affect success rates and innovation potentially in this space? And how do you weigh that when you're looking at stocks to put in the UFO ETF, for example?
So it's not necessarily who gets there first is going to win, but you have to get there. That's an important part. But you also have to have a really well thought out game plan. And so getting there is great, but being able to build a sustainable long-term plan that has achievable milestones and things that you can actually do and understand. Once we have this, that will allow us to then go out and do this. It's really important. And the U.S. has been looking at the moon for a very long time. Yes, we've gone there, and we're hoping to get back there again relatively soon. But what are we going to do with that time, with those resources, and eventually with the personnel that we put there? And so the early days of the space program were kind of more of a vanity project between us and the former USSR, and now there are real stakes, and national security is important, and lunar security may also be very important.
My instructors
and national security and space security very soon will likely come hand in hand. And so being able to access the moon and not just say that you have plans, then be able to start to build out what you're envisioning is very important. The fact that we do have other rival nations that are also competitive in that area is what is forcing this new space race. And the space race, I believe, currently is both for the moon as well as lower orbit. And so we go launch again, another very important program. But then you have companies that are almost singular focused on the moon. Not that you wouldn't be able to take those technologies and utilize them in other domains, but there's a very big focus on the moon right now because there are strong beliefs that substantial cislunar economy could be a very large revenue area into the future. So when you look at colonizing the moon, what are the things that you need for supporting human life? Well, it's the same thing to support human life here. You need shelter, you need clean water, you need breathable air, things like that. And so to the extent that we're able to figure out how to do that cost effectively on the moon, maybe there are technology that could bring back here to that as well. So as far as UFOs are concerned, the index that we utilize is a passive index where the team over at MIXTYPE, who manage this index, they're looking at companies that are publicly traded from major exchanges around the world that are deriving majority of the revenues from space-related activities, businesses, and services. And so, this passive approach still has people crunching numbers to determine what are those companies that are involved, and it's giving us a global representation of the publicly traded space industry.
So we need robotics. We need habitats. We need a power grid of some kind to power all of these things in the lunar colonization, in the lunar economy. So how does this play out in real time, Andrew? How realistic is a timeline of anyone being there in 2030? I mean, that's less than a half a decade away at this point. And as you're looking at the subsectors involved in the potential build out here on the moon, where would you specifically be looking to separate winners from hype?
So, looking at who's actually getting money and not just necessarily building something in their garage, hoping that someone's going to come out and think that, this is the best thing since sliced bread. There's NASA contracts that are out there. There are companies that have, their own goals or existing customers already that they're trying to build certain solutions for. We've got a race for lunar landers coming up before us with SpaceX versus Blue Origin. So first you have to launch to space, then you have to land on the moon, and then you have to have different resources, capabilities, and infrastructure that are there. So certainly, like you said, energy is very important. We've utilized solar in space for years now, but we might need other additional energy sources. There are resources on the moon, but we have to have the technology to be able to properly extract those resources that we need. Some could be used for things like oxygen and water. Other resources could be used, such as regolith, like Redwire is trying to do to help build lunar roads. It's crazy to think about it, but hey, we don't have roads on the moon. If you have certain types of rovers and things like that for transportation needs, you might need roads, landing pads, launch pads, and other things. And to the extent that we could utilize resources on the moon instead of having to send them from the Earth every time we need to build something, that could save a lot of time and money. And so building out these things like shelter, energy, food sources, water access could be extremely important. To the extent that rival nations get there before us, there is the possibility that we could be excluded from getting access to certain resources that we may need to utilize in the future. And so, getting there by 2030 does sound ambitious. The plans were to get humans there potentially even earlier, and these things have been delayed. And actually, one of our colleagues that helped develop the index, Michael Walter Range, former director of research from the Space Foundation, was the first person I ever heard say, "Hey, these things are very likely to get delayed. These are very ambitious timelines." And certainly certain things have been delayed, and he was absolutely correct there. So don't expect necessarily when dealing with space that things will happen on time, but understand that as long as there's money for these different goals, you'll have companies and entrepreneurs trying to step up to provide those solutions on a timely, cost-effective basis. And hopefully the more competitors that we have out there, the better solutions that we'll see. And when we're talking about government spending money on these programs, it's really important that money is not wasted and we're using it effectively. So I think the stakes are high, but the stakes of not winning and losing to a rival nation could be catastrophic. So I think that's why our government has aligned in the ways that they have.
And so we have the space race, but I want to make sure that we also bring it back down to earth here, because one of the things I learned in preparation of our talk is that the actual space economy has so much to do with what's happening on the ground here in our daily lives, and not just the exciting things that we think of in movies right now that could potentially be a reality. But you call it the hidden space economy, and I sort of love that term because we don't think about the way we interact on a daily basis with things that are part of the broader space economy. So, Andrew, can you just take us through what the hidden space economy is, and maybe even some examples of times, during my day that I might be interacting with companies in the space sector or even companies in the UFO ETF?
So we talked about communications. This interview likely would not be happening without space-based capabilities. And so, being able to connect and speak with people remotely, in many cases, space technology is helping facilitate that. And so, yes, work from home during COVID and all of those things, were enabled by space technologies. But if you look at the many industries right now that people are investing billions of dollars into, you think of things like AI, machine learning, cloud computing, cryptocurrencies and blockchain, connected devices and the Internet of Things. But there's a common thread with all of these, and that thread is data. And many people don't realize, but this data has to pass from point A to point B. And so all these things are happening seamlessly that we take for granted, but really space companies, in my view, not all of them, but certainly the communications and satellite companies, for many cases, they're operating as the toll operators for the digital data superhighway. And so although you see people investing directly into all of these things like massive data centers and interesting new technologies, in many cases, they don't realize the role that space is playing. And I think that that's why there has been some incredible opportunities for investors hidden in this industry. And you have names like an AST Space Mobile that just 2 years ago, was trading around $2 or so, and people weren't really familiar with them. And now it's become a very popular name for investing. You had companies like EchoStar that had a bunch of spectrum, and people were saying, hey, are they actually building things out in time? Or are they going to have to give back the spectrum to the government for free? And we saw in many cases they were actually able to sell it in multiple multi-billion-dollar deals, including one deal that got them billions of dollars worth of private stock in SpaceX. And so people don't necessarily fully understand these companies. They might be much more focused on those sci-fi movie ideas that are possibly attainable in our future, but are maybe the sexier kind of industries like mining an asteroid or something like that that's possibly further off, and missing the more immediate under the radar opportunities that are out in front of us. So I think this misunderstood hidden economy is there for the taking for those that are willing to do the research and find these areas that maybe haven't been covered by analysts as much. And so I think as people get a better understanding of what the space economy is, who the players are, and increase their imagination for what those companies might be able to do, that might allow them to better comprehend what the space industry is today and where it might be headed.
So with everything you just said there, Andrew, data center to all of that, is data as a service perhaps potentially the most profitable area in the space sector right now, and also perhaps the most underappreciated as well?
It's tough to say what will be, and to the extent that we come up with great data solutions here on Earth, terrestrial ones that we can build maybe faster, as possible. But in space, you might be dealing with fewer regulations or worries about endangered species or water protection or things like that, because it isn't as inhabited as here on Earth. So data is something that we are seeing a race for compute. We actually work with some private companies that are building out compute capacities. We work with private companies that are building out different types of space technologies that I don't think are on anyone's radar. And that would also have commercial applications back here on Earth. So I think what's very exciting to me is that there are companies that people have never even heard of that are doing things that are maybe out of left field that people don't necessarily see coming that they're working on today. And so yes, data could be important, but you need those kind of picks and shovels types of companies that are helping get those assets to where they need to be. And so, launch is one of those things where you need launch to access space. Fortunately, companies like SpaceX have done tremendous things to drive down the cost of accessing space. But as far as who the winners or where the biggest opportunity is, it really is a green space with tons of opportunity out there. Again, only limited by our own technological capabilities, and as we start to put those into place, many times you come up with new use cases for that, and that expands out new multiples of business lines and things like that as well. So it's very dangerous to, especially with space, to say what the best opportunities are or where the most money is headed. But certainly if you look at where companies are getting funding from, what NASA contracts are out there, where the government wants to spend military and defense, and it seems like a lot of the kind of areas that are priorities are also ones that are also kind of very important for American security, safety, defense, and things like that.
Andrew, I'm so glad that we got to have this chat. I'm so glad you could join us for our first episode of Market Matters. It's truly fascinating, and certainly I know not the last time that we'll be talking about the space economy, so I hope you'll join us again. But thank you for taking the time to be with us today.
I look forward to it, and thank you so much for having me. This was an absolute pleasure, and looking forward to listening to many more of these podcasts in the years ahead.
Thanks again to Andrew for joining us on our first episode of Market Matters with Marley Caden. A few things really stick out to me from our chat. First, SpaceX is going to change the sector for better or worse. But the question is, what kind of company is it going to be? If they raise $75 billion in capital, how is that going to be deployed? Is it orbital data centers? Is it competing with launch companies and Blue Origin? Or is it M&A? And the space race. It is a real investable theme with the required infrastructure build-out and the need to make the moon or other planets livable before humans arrive. Andrew's saying that the stakes are high, but losing to a rival nation could be catastrophic is not a quote that I will soon forget. And lastly, the space economy is a lot more than just the moon and outer space. It is a daily part of our lives with our dependence on satellites for the world to function as we know it. As Andrew highlighted, the misunderstood hidden economy is there for the taking for those who are willing to do the research and take a look at some of these less talked about names. Overall, this is a long-term investment story with a lot of diverse players, and patience is a must here. We are going to leave it there, but I want to thank you all for being with us. This has been Market Matters. You can find us wherever you get your podcasts, and please make sure to rate, review, and subscribe. I'm Marley Caden. We hope you'll join us again next week.
The people who hurt me are dead. All but one. My mother.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest.
My instructors didn't.
Level up and invest smarter with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Noxians are the heroes they think they are.
Welcome to Market Overtime here on Schwab Network. I am Sam Vardas. Now, when you think of the metaverse experience and online gaming, chances are you're thinking of Roblox. The popular platform gives its users the chance to create and share content amongst its millions of players. So, how does a company in the metasphere make real-world bucks instead of Robux? So let's go straight to the source and bring in our next guest, Naveen Chopra, Chief Financial Officer at Roblox. Thank you so much, Naveen, for joining the Schwab Network today.
Hi, Sam. Thank you for having us. We're excited to be here.
Let's start with the big story in this market, AI disruption. Now, you don't beat around the bush when you say the market has it wrong. But let me ask you this, Naveen. Easy is it for me or a karaoke company to replicate what Roblox does cheaper and faster? Brilliant.
Well, AI is going to be a huge challenge for our business because it's actually probably going to make it harder for people to replicate what we do. And the reason I say that is that there's so many different aspects to Roblox. It is not just an engine for creating content. It is a platform that marries that content with users. It's got a very sophisticated global hosting ecosystem and infrastructure. It's got communication integrated throughout the platform. It's got search and discovery experiences and capabilities integrated throughout the platform. It's got monetization capabilities. And it's really that vertical integration of all of those different components that makes Roblox what it is. And we're on the midst now of being able to use AI to accelerate what we do and what we provide to our users and our creators on all of those different dimensions. So we actually think it's going to sort of widen our moat in many ways.
Okay, so it's that vertical integration that you speak of that is supportive of the strength of your moat, as you say, which is really seen as what is setting apart the winners and the losers here. I know that you've also been investing very heavily in artificial intelligence yourself. I mean, this quarter you rolled out a few new models. What exactly are they looking to solve and how are they resonating? What's been the feedback to them?
Yeah, it's a great question, Sam, because there's been a lot of excitement about AI and a lot of different, demonstrations from various AI models that have, I think, stimulated really exciting imagination about the potential of this technology. That being said, we are very conscious of the fact that great games need to provide certain capabilities that, at least to date, we have not seen from more generic AI models. And what we mean by that is that games, number one, need to be deterministic, right? If you and I shoot at a target at the same time, we need to make sure that we both see the same result. And that's not always the case with AI models. You can get, unpredictable results and inconsistent results even when you give some of these models the same prompt. So gaming needs to be deterministic. It also needs to be interactive, right? It's not enough just to be able to walk into a jungle and wander around and look at the jungle from different angles. You need to be able to interact with that environment. You have to be able to climb a tree. You have to be able to pick a piece of fruit. You have to be able to look at that fruit from different angles and maybe throw it to somebody else who's playing the game, which also means these games have to be highly interactive. They need to be able to support hundreds, thousands, perhaps even millions of concurrent players. And those players are going to be a combination of human beings and also NPCs. So what we're trying to do at Roblox is develop a combination of internal AI models while also leveraging the best of third-party AI models to solve sort of those mental requirements that we think are needed for great games. And we think that's going to be a huge opportunity as it continues to evolve.
I want to talk about some of that content and some of those specific games, but I do want to pick your brains about earnings, given you are the CFO after all. So let's discuss some of that. I mean, you characterized the last quarter as spectacular. Could you give us some color around
may
that?
have done this to me.
Yeah, the reason I describe it that way is that Roblox saw just tremendous growth in 2025. The number of daily active users on the platform almost doubled between the end of 2024 and the end of 2025. bookings, which is our measure of top line, grew 55% year over year. And perhaps most importantly, our creators really flourished. We paid out over $1.5 billion of DevEx, which is the share of revenue that we pay to our creators in 2025. So tremendous growth of the platform. We saw some really exciting big viral hits, things like Roller Garden, Steal a Brain Rot, 99 Nights in the Forest, which were played by millions of people around the globe and even set records in terms of number of concurrent players to ever play a video game. So, in virtually every dimension, it was a banner year for the company.
I mean, you saw it in the numbers. You've got the engagement, as you say, and you're seeing the monetization momentum here, Naveen. But what is the goal here, and what do you believe is a sustainable rate?
Well, we've talked about long-term growth for our business in excess of 20% top line. We've obviously been doing significantly higher growth than that over the last few years. And I suspect some years will be much stronger, and other years maybe sort of closer to that baseline. But when we look at the trends behind our business, whether it's the trends around UGC content, the trends around interactive experiences, trends around AI, we just see a lot of tailwinds that we think is going to continue to power growth for many years.
Okay, well, let's talk about the important stuff, and that is how to make money. And obviously, one of those ways is by issuing virtual currency known as Robux, as I mentioned, which people can actually use to buy stuff on the platform. So, Naveen, how do you strike that balance between making it sustainable for users while staying profitable at the same time?
Yeah, we actually really like what we call the microtransaction business model. We think it really aligns the interests of our users and our creators and fosters a lot of innovation on our platform, where creators aren't subject to sort of, an over-the-top advertising model or something like that. We're often compared to YouTube. Many people think of Roblox as the YouTube for gaming, and there are many aspects of that analogy that I think are accurate. We're obviously a very large-scale UGC platform with strong network effects. But one of the places we are most different than YouTube is that we don't rely on advertising revenue. And so it's really up to our creators to think about how they want to monetize engagement in their games. And we think they're best positioned to be able to do that. They know the things that people want to do. They know the things that create value in their games. They can experiment with different virtual goods, whether that's an avatar item, a T-shirt, or a power-up in a game. And we found that to be incredibly successful, and our users really enjoy it. And to your point, when you look at the engagement on the platform, it seems to be working really, really well.
Yeah, I mean, obviously, creators being able to monetize their work. I mean, you're paying out millions to some of these top developers. I'm just wondering, Naveen, how do you determine the pricing across different regions? I mean, does it face inflation, for instance?
Well, ultimately, our creators determine how to price virtual items in their experiences. Now, we do provide them with a lot of tools to help them think about how to optimize those prices. And in fact, those tools have been one of the ingredients to the growth that we've seen over the last couple of years. So, for instance, we provide tools that help them understand, what's the right price for a T-shirt versus a special power in a game might be. We provide tools for them to think about how to differentiate that pricing between what you might offer a user in the United States versus a user in Indonesia. And our developers have the option to utilize those tools or not. Increasingly, we see more and more developers wanting those kinds of tools because they're actually very effective in maximizing their monetization in their games.
I think the market is really laser focused on this, obviously, part of the business, because you're obviously paying out millions, as I said, to some of these top developers, and the creators are able to monetize their work. So how are you able to then balance what is a pretty costly creator economy, which you need to thrive, with then your own margin expansion and protection?
We actually think we can do both. So one of the things that I have been very clear with our investors is that we see opportunities to actually increase the share of revenue that we pay to our developers while also expanding our margins. And the reason that we can do that is because we see tremendous opportunities to grow operating leverage in our business as we continue to grow the top line by 20% or more. We think we're create both fixed cost operating leverage. We're also continuing to drive down some of our variable costs. And as those margins expand, our goal is to share that with our creators and our shareholders.
What about safety spending, Naveen? Because no doubt this is an inevitable part of your business. Obviously, you're dealing with children who are on the platform as well. How do you find that balance between what is a necessity and also staying sustainably profitable?
You know, that's really not a difficult decision for us because safety is at the core of what we do. We do not prioritize profit over safety. At the end of the day, we fundamentally believe that if we provide a safe, enjoyable environment for users of all ages on our platform, we will have a very sustainable and profitable economic model. So for us, the tough decisions around safety are not about how much we spend. The tough decisions are how do we do it in a way that balances the interests of our creators, our users, policymakers, parents, all the different constituents that we care about. And I think we work really, really hard to find the right balance of technology and policy that we can use to provide that safe experience and make good on that goal.
And I know you said advertising isn't a huge part of the revenue, but I mean, it is seen as a critical monetization opportunity here. And you have made progress on this front, but how do you scale that without affecting or compromising the user experience within those safety targets?
Yeah, you're right. We have a small advertising business today, and I think the potential is really exciting. And I've told many people that I am highly bullish about the long-term advertising opportunity on the platform. The reason that I do think it's going to take a little bit of time to develop is exactly what you were touching on, which is that we need to be really thoughtful about how we integrate advertising into the Roblox platform to ensure that it does not ultimately dilute engagement, right? It's more complicated to think about how do you insert an ad into an interactive game than it is to stick a 15-second ad in the middle of a linear video screen. And so we work closely with our creators to help them think about ways that we can integrate that advertising. What are the right places in the game? How frequently should that advertisement show up in a game, et cetera, so that we get that right balance of not missing a monetization opportunity on behalf of our creators, but also not doing something that ultimately is going to turn users away from the platform.
Yeah, no doubt. A tricky balancing act there. And I saw you recently announce that you're going to start taking a share of revenue from in-game brand partnerships starting in January. I'm just wondering who you have some of those partnerships with and what that means and why you're doing that.
Well, this is really about ensuring consistency and safety on our platform. We had some of our creators that were striking brand partnerships independent of the platform. And that really makes it difficult for us to ensure a consistent safety experience. For instance, we don't allow the sharing of certain types of information with advertisers or targeting of certain types of advertisements for younger users. And if we are not sort of operating all of the advertising on our platform, then it becomes difficult to ensure that type of behavior and standards across the platform. So that's really what we're going after here. And obviously making sure that our creators are fairly compensated when they use our platform for that type of advertising.
And I noticed the company also announced recently that it's not going to issue annual guidance starting in 2027 due to inherent variability in the company's business. You're going to focus on giving that quarterly guidance. I'm just wondering exactly what that means and why you decided to do that.
Yeah, we were pretty explicit about this on our last earnings call. I mean, one, we continue to be very bullish about the long-term growth prospects for Roblox. We talked about this a few minutes ago. Everything that we're seeing in terms of user behavior, the content pipeline, opportunities for innovation, the tailwind from AI makes us more and more bullish about the long term. The fact of the matter is, we operate in a across the platform. As we've seen in recent years, there can be big viral hits that change the financials in any given year materially, and we don't have the ability to predict exactly when those things are going to happen. So rather than trying to provide annual guidance, which ends up having to be overly conservative, I would say, we're just going to focus on guiding a quarter at a time and achieving our long-term goals.
Okay, let's switch gears to the content. I know there's been a big focus on different age groups interacting on your platform. You're now age checking those who actually communicate on this. And so how has that actually been working? What's been the feedback so far?
I think the feedback has been positive in that people understand this is a very important aspect of ensuring a safe experience for all ages on our platform, meaning we really need to know the age of people using Roblox, and we don't want to have to rely on self-reported age information, which is to date what the vast majority of large-scale digital platforms do. And unfortunately, we know that self-reported age information is just not accurate. So we've had, in early January, we started requiring facial age checks in order to get access to communication capabilities on our platform. As we reported on our earnings call, we've had a little less than half of our daily active users that have gone through that process. As each day goes by, more and more people go through it. We have seen, as expected, an initial sort of results. There are people who are no longer able to communicate on the platform until they go through the age check process. But that has been in line with our expectations, and importantly, it hasn't really impacted bookings on the platform, where we've seen a pretty modest impact. And we actually believe that if we can evolve the functionality and get more and more people through the age check process, it's actually going to be growth driver for our business. And the reason I say that is that those people on our platform, we can provide a fundamentally better experience. For example, if you're a 12-year-old, your gaming experience is going to be way more fun if we know we can put you in a game with 12-year-olds rather than putting you in a game with people who purport to be 12 years old, but in reality, it might be one of them who's 9 years old and one of them who's 35 years old. And guess what? The way that those people in those age groups communicate, their skill level is fundamentally different than a 12-year-old, and the 12-year-old is going to have a lot more fun if they're playing a game with people of a similar age.
I don't have time for this.
It's fascinating, and it makes sense, and particularly as you are seeing that user base skewing younger, I do believe that you're looking at about 35% under 13 right now. But what I found really interesting, Naveen, was you've actually found a bigger growth opportunity in the 18-plus age group than you had initially thought. I see that you're monetizing 40% higher than the younger cohort, so it's not just a kids game. Can you explain why that's so surprising and how that's changing the things that you do to try to capture some of that?
Yeah, I mean, this is, I think, probably one of the most exciting growth opportunities for Roblox. Now that we have accurate information about the age of users on our platform, as you pointed out, it's become clear we have an even bigger opportunity to grow and attract older users than we thought. In fact, as we shared on our Q4 call, we have less than 10% of the people between the ages of 18 to 35 on our platform today. And so that's a tremendous growth opportunity. A lot of people are concerned that the market's getting saturated and they grow. Well, this data tells us is we can go a lot more. And the way we're going to do that is by focusing on the development of content for our platform that will appeal to older users. And that means a combination of new creation technologies that our developers can use. It means continued optimization and advancement to our discovery algorithms to help people find content that may be more interesting to them. It means focusing on certain genres. And I do think this is a place where AI is also going to be a huge benefit because it's going to make it easier and faster for creators to build this kind of content
experience with your games? I mean, you mentioned a couple of them earlier, like Growing Gardens is very popular. How much pressure is there from the role of a CFO to ensure that you're constantly rolling out hit viral games?
Look, our job at Roblox, for everyone, not just the CFO, is to create a platform that facilitates, the rapid, easy development of content on an ongoing basis. And while we don't fundamentally control those games, and we're not a game publisher on our own, we do take very seriously the responsibility to take as much friction out of the content creation process as possible and to maximize the economic opportunity for our creators on our platform. And I think if we do those two things, we will see a very healthy pipeline of content continue to emerge on Roblox, and it'll be even more diverse than what you've seen over the last few years.
Has been slain.
And we all know, obviously, working in capital markets, that one of the key roles of the CFO is to have to say no to things sometimes. I'm just wondering, in your short tenure at the company, is there anything that you've had to say no to?
In a sense, yes, you're right. That is a challenge at Roblox because there are just so many opportunities for innovation and so many things that we would like to invest in. But I think we're pretty good stewards of shareholders' capital in that,
for the loss.
We invest with diligence. We try and experiment with a lot of different things. And when they don't work, we move on. And we're not afraid to admit that, we tried something and perhaps, didn't play out the way that we expected. So I encourage that spirit of innovation. I encourage that spirit of moving quickly, but I also encourage discipline and making sure that we understand and are honest about the performance of the investments that we make.
And as I mentioned, you haven't been in the role very long. I'm just wondering what you would say your biggest achievements have been so far and what your vision and your strategy is moving forward.
I think it's, to your point, it's a little bit early in my tenure to trumpet any achievements. I'm proud of what the team has accomplished. And if you just look at the progress of the business over the last 2 or 3 years, that doesn't come easy. There's been a lot of innovation, a lot of execution, a lot of learning that has enabled the business to grow in the way that it has. In terms of priorities going forward, we are very focused on growth, but also balancing that with an economic model that will continue to pay dividends for our creators and our shareholders. And that's going to require continued investment in technology, continued efficiency, and continuing to do the right thing in terms of protecting safety and the experience for our users.
And Naveen, what about the growth opportunities by region? I mean, obviously you've seen some strong growth here in the US and Canada, I believe up 41% or so, but APAC really stood out to me, up 96%, Japan 60%, Indonesia 700%. What is going on over there? Why is Asia so strong?
Yeah, well, this is one of the reasons that, as I said, we're probably more bullish today than ever before about the long-term opportunity for Roblox. We see that in these markets where we are still relatively low, we see relatively low penetration, there's just a tremendous growth opportunity both with respect to users, engagement, and ultimately monetization. And our creators see that too. We have the ability to deploy these games on our platform and help our creators reach a massive global audience in a very short period of time without having to spend huge amounts of money on infrastructure, scaling, user acquisition, and the like. So it's an incredibly efficient platform. And the growth that you're seeing in some of the markets that you mentioned, I think is a great proof point of that.
Then, Naveen, I mean, what can we be excited about when it comes to Roblox in 2026?
Has been slain.
You should be excited about a lot more games, many of which will look unlike anything you've seen on Roblox in the past. I think we should be excited about AI accelerating virtually everything that we do. And you should be excited about seeing us continue to set the gold standard for safety of large-scale online digital platforms.
And what predictions do you have about gaming opportunities in the future. I mean, how is AI reshaping that? I mean, how is the user experience evolving when it comes to some of this technology?
Yeah, it's an interesting question. I think we're going to see several things continue to evolve in gaming and all it, entertainment and media, perhaps more broadly. Number one, I think, as we've already seen over the last few years, these experiences, games in particular, are going to continue to become much more interactive, much more social, and much more multiplayer, such that sort of the distinction between gaming, communication, social media is going to continue to blend, and I think that's a trend that we embrace. I think we're going to see rapid acceleration in content creation. And rather than sort of in the traditional gaming world where you saw developers take, in some cases, years to create a new game and then it would launch and then, it would be another 3 years before the next version of the game would come out. I think both sort of user behaviors and AI technology is going to result in much faster iteration where we're going to see perhaps shorter games, if you will, get published, but then those games will evolve and iterate very, very quickly because ultimately that's what I think users want and it's what the technology enables.
And what's the best part about working for a video game company in this day and age, given everything you just laid out?
Put it into me.
Well, it's a heck of a lot of fun. I have 3 kids, all under the age of 18, so they definitely think I'm a bit of a rock star, which makes it a lot of fun to come home every night.
And you mentioned, under 35. Anyone over 35? I mean, retirees playing games. I don't know, a new lease on life, a bit more time on their hands, Naveen.
There's definitely opportunities for that. There are definitely older people on our platform, and one of the things that we want to get better at, quite frankly, is diversifying the kind of content that you can find on Roblox so that it appeals even more to people of all ages.
Naveen, fantastic chat. Thanks so much for joining us here on Schwab Network. Really appreciate your time. Naveen Chopra there, CFO of Roblox. That'll wrap up this episode of Market Overtime right here on Schwab Network. Watch more, subscribe to our YouTube channel, and follow us on Facebook, Instagram, and X. I'm Sam Vardis. See you again soon.
I never miss.
Trading with Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Friends just get in the way.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
The Black Rose may have done this to me, but Noxus knew.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
First day, so sometimes, try again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
An ally has been slain. Ally has been slain.
Help us fight, the heart will live.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It's noon Eastern here at the New York Stock Exchange, and Wall Street is continuing to keep one eye on the latest between the U.S. and Iran as President Trump ratchets up the rhetoric on Truth Social. Let's get into a check of the major indices as we hit the lunch hour on Wall Street. We are looking at the S&P 500. Take a little bit of a step back. We're off about 0.33% there. Dow is a little soft, off by less than 0.1%. NASDAQ 100 seeing the bigger pullback as we see a drop in some AI-linked names. NASDAQ 100 lower by 0.8%. Russell 2000 off by about 0.2% there. Here's the roadmap for today's show. We'll look at example option strategies for Vertiv, which is taking a big step back today amid that pullback in AI-linked names. Plus, the team from Lifefolio will be along with new sentiment data on Home Depot, and keeping our eye on the state of the consumer with retail in much focus this week. We've got TJX, the parent company of TJ Maxx, on our radar today. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. We've got Kevin Hinks live over at the CBOE, plus Kevin Green, senior markets correspondent, also joining us today. Attack of the Kevins today. All right, we got stock softening today. The broadest benchmark of U.S. stocks potentially on a path to losing ground for a second day in a row here. Of note, we're seeing a pullback in memory names. Those come after those comments from Seagate CEO at the JP Morgan Chase conference that his company might have trouble meeting the AI demand surge. We'll start out with you, Kevin, over at the CBOE. Your thoughts?
Markets have been kind of rocking all day since early this morning. They were down overnight. The news came out that there may be a new proposed deal between Iran and the U.S. Market rallied, surged higher right pre-open, opened a bit higher, and then, more headlines. U.S. did not accept any proposals. So the rhetoric is definitely two things. It's going back and forth. That's probably a good thing. And it's also heating up. We're not sure. But at least right now, crude oil's all over the board. The market's all over the board. There's so many things coming up later this week with earnings, but right now we are living and dying off reports and headlines between the U.S. and Iran, Diane. I think that's where we sit as we get to midday. I mean, every single thing, right? It's crude oil, it's dollar, it's yields, it's VIX. Everything is moving in unison with each headline that comes out. And so these are times where you got to stay nimble. You got to be ready to move. You got to, don't stay long. Be in the moving business, not the storage business, I always say. And these markets are moving around, Diane.
Okay, speaking of moving around in headlines, you got Seagate under sharp pressure here, down more than 7%. Micron also losing some ground amid these comments from Seagate CEO. KG, your thoughts as you look broad strokes across the market and maybe the memory names thought there.
Well, we did see a distribution day on Friday, Diane, especially going into the close. We're selling good accelerates, and we did see a little bit mental risk off in the market. So the memory names had seen a pullback here. We have defensive sectors like consumer staples, or even if you're looking at other pockets of this market that has been, let's say, lagging the broad market rally here. Are cooling off here a little bit. Kevin and I were actually at our the Schwab Market event over the weekend, and I can tell you the majority of the questions that were asked to me by those that attended was about Micron. And so you are maybe getting some jitters at these current levels and maybe some profit taking, and that's okay, because on the back of that, as we do see the memory names kind of selling off, you are also then seeing software names catching a little bit of a bid. So the rotation trade is still in effect. You're not seeing a sell everything type of an event happening in the S&P 500, at least so far. And I think you are seeing a drying up of liquidity levels within the book depth or in the S&P 500. I think the yields are definitely going to be another big driver. It's kind of in the back of our minds here as we got close to that 4.6%, but seeing us kind of pull back here from those levels. And if we do have a pullback and we go back to the 20-day moving average, it's around, let's say, 1.5% from these current levels for the S&P. That would actually be a really healthy pullback before we try to move higher. So we're making higher highs, making higher lows. We're digesting a lot of the news headlines here, but I wouldn't get too concerned as of yet.
Okay, so not too concerned. It does seem like Wall Street is not dramatically concerned, but as Kevin, you mentioned earlier, they do continue to keep an eye on the developments in this standoff between the U.S. and Iran. You have President Trump posting on True Social as soon as about an hour ago about, it just seems like the rhetoric is heating up. You've got oil higher. We're sitting in triple-digit territory, whether we're talking about WTI or Brent crude. What's your thought on, it seems like the market is kind of able to process this level, but how long?
Just look at the 1-minute chart today on Crudo/CL. You see the sell-off about 7:30 Eastern time this morning, all the way down. Crude oil got under $99. Now it's back up on the day. Why? Because the headlines are driving this trade today. Headlines driving crude, headlines driving crude, driving the rest of the market. So I think the fact that there's back and forth going on, I would love to know what's going on behind the scenes, because it sounds like there's some pretty high level negotiations going on here now. And President Trump believes in pressure. So the more he amps up the rhetoric, the more he's probably negotiating behind the scenes. So I remain pretty optimistic based on, early this morning when this news broke out that Iran had actually put in a new proposal. I think they're looking to try to make a deal. I don't know if it'll happen. I have no idea. But I think the fact that they're talking and rhetoric sounds fairly positive. I could be wrong, though.
KG, your thoughts on oil?
I think the $100 level has been a key area of resistance for WTI for a relatively long time here, and I think it's going to take a lot to really try to push this price higher, but the trajectory is higher highs and higher lows, and it does appear this conflict does escalate that the price for WTI will probably get back to that 1 and that's the key area that we're looking at as far as because the supply is still disrupted, not only in the Middle East or if you're looking at the Asia markets, but here in the United States, we're drawing a significant amount of oil from the SPR, 8 million barrels last week, one of the biggest draws that we've ever seen. And at this point in time, if we continue at this pace, there will be maybe some concerns or some questions around the durability of these SPR releases moving forward, especially when you're trying to backfill diesel. Now, on the back of that, Diane, you are seeing demand destruction in certain pockets of the market, especially the Asia markets. If you look at China's industrial production numbers that came in yesterday evening, they were not that great. In fact, we're going back to pretty much the Russia-Ukraine conflict as far as the industrial production activity in China. You also saw retail sales. Once again, month-over-month clip was looking at a supply shock that we saw. You are seeing demand destruction that is taking place here. So on the back of that, it takes a lot more to actually push it to 120, but I still think that the trajectory is probably a little bit higher rather than lower, unless we do see a deal between Iran and the U.S. And unfortunately, it seems like if that were to take place, we would take, as far as the U.S., probably a significant amount of concessions. I'm not sure if the administration wants to do that right now.
Okay, guys, later this week we get the bell of the ball reporting its results. NVIDIA, the stock gained some ground last week amid the CEO President Trump's trip to China. We're seeing it take a step back today. Morgan Stanley, though, we cut through its price target ahead of the earnings. Talk us through what expectations are going to see.
Well, you know the numbers that NVIDIA's going to put up are going to be spectacular. They're going to beat, they're going to raise. I don't know what they'll guide. But what I've always contended about NVIDIA is not only do you have NVIDIA, but you have the massive names directly related to NVIDIA's earnings, like hyperscalers, right? Microsoft, Amazon, Alphabet, Meta, count along with me. Semiconductor names. AMD, Broadcom, Intel, Taiwan Semi. If we go to memory, Micron, Supermicro, Dell Computers. If we go to direct AI cloud infrastructure, you got CoreWeave. That's 12 companies, Diane, who will directly be affected by NVIDIA's earnings. And that's just the first layer. Then you get the next layer after that will be affected. I just think it's not only NVIDIA, but NVIDIA will move the entire market, not just information technology, but it'll move so many other parts of this economy. That's why I think it's so important. And at some point down the road, we're going to have to get into the fact that all the companies that NVIDIA owns, right, their portfolio and how that portfolio is doing. So, yeah, I think the ripple effects of what NVIDIA's earnings are going to put out. And remember, last quarter, they put out spectacular earnings. The stock sold off, Diane. So there is no guarantee out there that they're going to put up a good number and the stock's going to rally.
Okay, so besides Morgan Stanley, KG, I got a note in my inbox from Dan Ives last night about NVIDIA. He says they estimate over at Wedbush for every dollar spent on NVIDIA, there's an $8 to $10 multiplier across the rest of tech. He also says that they believe that tech stocks could rally another 10 to 12% from these levels into year end. Talking about the fourth industrial revolution being the AI revolution. We know he is like a mega perma bull over there for NVIDIA. Your thoughts on NVIDIA ahead of its results?
Look, I mean, from a technical standpoint, NVIDIA is up over 20% in the last 12 to 13 calendar days. So that's actually a really remarkable move, especially for a stock that has been consolidating for around 7 or 8 months or so. So a breakout to the upside, hitting this, going 235 level here, pulling back to the 20-day moving average is not outside of the realm of possibility. And even you would probably actually want to look at maybe the stock coming back to $200 to get a little bit more enthusiasm for this name. But I believe this is actually a catch-up trade for the semiconductors. Now, that being said, NVIDIA has not really been the most bullish earnings announcement for the street over the last 3 quarters. And in fact, 7 days later, the stock is usually lower than the price that it printed before the earnings announcement. So we have to be mindful of that. But Kevin's right. They're going to give us an update on the ecosystem. It's going to be a little bit lagging, though, because a lot of the hyperscalers have already reported. We know what their CapEx is going to be. NVIDIA is just going to kind of reinforce that. And I think the big curveball that you have is maybe this CUDA software and how they are actually integrating that with other customers and how that ecosystem is actually growing, because that's going to be the long-term pricing power that this company could actually have, or basically annuitizing their business similar to how Microsoft annuitized the Word platform and the Windows platform just in general here. So I think it's a little bit more bearish than bullish, but at the end of the day, it's actually looking like a really decent run to the upside. A pullback is not outside of the realm. And I think that if you get this catch-up trade taking place here, I think NVIDIA is going to be one of the bigger beneficiaries of that over the next couple of months.
All right, let's talk ServiceNow. It's getting some love from Wall Street today. That stock is rallying 7% right now after Bank of America reinstated coverage with a buy rating. Kevin, over at the CBOE, your thoughts?
Yeah, I saw that same report, 130 price tag, reinstating a buy rating. Here's what they said. They said the bank cited software giant's strong system of action platform and its unique positioning to leverage autonomous AI agents. Okay, if they're involved, if they could be a beneficiary of AI, that's probably good. But what you can't argue with is the stock is down over 50% this year. It hit a high of 211 early in the last summer, and so last 12 months it's now traded down to $81. Now it's trading right around a little over $102. So this has been a pretty steady erosion of the price action here. So ServiceNow getting a little bump today, but wow, I mean, teardrops and tidal waves, Diane. This is a small bump from a pretty strong sell-off.
Great point. KG, your thoughts on ServiceNow?
Yeah, I'll take the fundamentals out of it, and I'm just going to look at two different dynamics that we have seen in this market over the last month and a half, 2 months or so. Hardware, if you're looking at the semiconductors, has been moving higher. Software has been moving lower, and there's been a correlation trade that has been in effect. In fact, Friday, when we saw a pullback in the S&P 500 over 1%, what outperformed? It was the software names like a ServiceNow or a Microsoft. If we do get this kind of unwinding within that type of trade where we have those that have been long hardware starting to sell off here a little bit, those that have been shorting software may have to buy back in, and that's exactly what we have been seeing, and ServiceNow is going to be potentially a beneficiary of that. Technically speaking, on the daily chart, and I'll talk about this first, potentially a triple bottom here. It is breaking above the 50-day moving average. It has not been able to close above the 50-day moving average literally since October of last year. So it has a milestone that it's testing right now. Let's say that we get that close. You look at the weekly chart, it becomes a little bit more bullish. The 12 EMA on the weekly MACD crossing above the 26 EMA, that's bullish. RSI making higher lows, that's bullish as well. The 20-week moving average in blue is going to be your first area of major resistance at 106. You break 106, you're talking about 140 for this stock. So technically speaking, this looks like actually a really decent setup that's taking place here. And that pairs trade, if it is going to kind of rotate and we start seeing that unravel here a little bit, I think software as a whole probably could catch a bid as well. ServiceNow is probably one of the cheaper names in that basket that we've seen kind of sell off aggressively over the last couple of months.
Okay, all right. Well, 130 is the price target that Bank of America sees potentially from here. It certainly has some momentum today. All right, and shout out you guys for the market drive. That's not just working for the weekend and working on the weekend. We got bull versus bear coming up. The guys will get their example trades put together for Vertiv. The stock is pulling back as the AI data center trade cools. We've got more Fast Market after this break.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab. Invest your way with Schwab.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Fast Market here on Schwab Network. Shares of Vertiv are under pressure as investors pull back from some of the high-flying AI infrastructure names amid a broader risk-off move. The weakness comes despite a wave of bullish analyst commentary recently. Bank of America raised its price target to 440 and reiterated a buy rating, while Barclays boosted its target to 412. RBC lifted its target to 435, all pointing to continued strength in AI-driven data center demand. Analysts have been highlighting Vertiv's growing backlog, strong hyperscaler spending trends, and its positioning as a key picks and shovels play in the AI build-out. Now, the stock has jumped more than 100% so far this year, but today investors are taking some of those gains back. Time now for the tug of war on Vertiv. For that, let's welcome back in our co-hosts Kevin Hinks and Kevin Green. It is bull versus bear time. So before we get to each of your example trades, we've got to get your thoughts on Vertiv. KG, I'll start with you this time. Your take.
Yeah, I think you're just seeing a overall cooling when it comes to the data center news and the data center industry today, at least. So we are seeing the sell-off to the downside. From a charting standpoint, you want to really be able to hold this 340 level in order for us to kind of continue this bull run to the upside here and have really some confidence in it. You are seeing a significant amount of volume on the selling pressure today. That's also not really a good sign, especially at the top of a trend. But overall, we are still making higher highs and higher lows, at least for now. The stock is also hitting the 20-day moving average, which is sitting around $337 for now. So that has been an area of support. In fact, actually, if you kind of look at a chart back on April 28th, that was the last time that we actually hit it before moving higher. And if we break below, we go to around that $300 level. That's where the 50-day moving average is sitting at right now. But a lot of these stocks have run up really aggressively. I'm not saying it's too fast, but it has been an aggressive run up. So a pullback, I think, is healthy, even though we are seeing an aggressive sell-off within Vertiv today, down 8.5%.
Kevin, your take.
You know, this stock, when you look at the run it's had in the last 12 months from basically $101 to $379, they are one of the leaders in infrastructure technology. The numbers they put up, how about these stats? A $15 billion backlog, 252% order growth, 28% organic sales guidance for 2026. This company is doing good things, and they are, like I said, right on the cusp of everything going on. Now, are they cheap? Are they inexpensive? Or are they priced well? Their PEG ratio sits about 1.5. We talk about the PEG ratio a lot on this show, and it's the price to earnings growth. So that's not crazy expensive at a 1.5 PEG ratio. There's certain ones that are higher than that. So that gives traders a little bit of comfort, but you know, this stock is backing off. It's run a long way. It's backing off a little bit. It certainly has a chance to move. This is one that could move, but again, remember, how high is the bar? It's incredibly high. Can they put up good enough numbers to hold the stock here a rally? I have no idea, Diane, but this stock, as you know, has run a long way, and some of those names, we've had a lot of them over the last couple of weeks, are having trouble holding these levels.
Indeed. All right, guys, let's jump into the example trades. KG, why don't we start out with yours? What's your approach today?
Well, I'm just going to look at the technical. Once again, we're testing the 20-day moving average right now, and the next moving average is going to be the 50-day, sitting at around that $300 level. And so kind of taking that into account, I'm actually looking at a, let's say, bullish trade to the upside here, leveraging two parts in order to really formulate this trade. Selling a put spread, so looking at the June 18th, 300-290 vertical put spread here, selling the 300, buying the 290, and then going long the 420 calls, doing this for a debit of $3.15. Now, the max loss on this trade is going to be the debit paid $315 plus the width of the spread on that put. So if the stock goes below this 290 level at the time of expiration, that put spread's obviously going to have a max loss, and then you also are going to take the max loss and going long the call as well. So the max total loss for this is $1,315, unlimited profit to the upside. What you would like to see is the stock obviously moving aggressively higher here after testing some of these key areas of support. Maybe earnings is going to be able to provide some stability there, and the break-even point is $423.15. So you have about a month out in order for this to really work in your favor, but you're trying to leverage some of the higher implied volatility that we are seeing right now, taking in a credit when it comes to those puts, buying those long that is out of the money here in order to try to once again get some upside exposure. So somewhat of a little bit of a unique trade. Curious to see what Kevin Hinks thinks about this trade setup.
Well, Kev, setting up a bullish trade, right? You've assumed a bullish posture, and then you've given yourself what we talk about all the time, which is using finance, selling the put vertical to finance the purchase of the call, right? You've got one great thing about it is you've got unlimited upside. Here comes that infinity word because you're naked long the call. The risk, obviously, is the debit you paid on the call and the $10 wide put vertical that you're selling. That's the risk on this trade. It's not without risk, but remember, you've assumed a bullish posture, and you are risk defined. It's not small numbers, but you are risk defined, and you've got unlimited upside. So this is something we talk about all the time. Once you establish your direction that you favor, it's how to do the most for the least, right? Get the most bang for your dollar for the least amount of money. And that's what Kevin's done here, Diane. He has financed his long call with the short put vertical. Now, what I did was something different. I think there's a high bar, so you could just say it's you want to bear straight, but I don't know what Vertiv's gonna the big video game type numbers that they're gonna put up in terms of growth and earnings. So what I looked at is the $25, almost $26 expected move, and I looked at a trade that gives me the opportunity to be profitable in either position. So what I did is the double calendar. I bought just a 1 week, the May 29th, May 22nd. I bought the 365 call calendar and the 315 put calendar. Combine those together, the put calendar was about $3, the call calendar was about $3.85. Combine that together, and you've got about $6.85 is the debit on both packages. And now you can hope for a $25 move in either direction, Diane. And so looking at this, it gives you some protection if you're wrong and the stock goes down. Kev, this one, I don't care where it goes, but I do want it to go towards one of those strikes. I don't want it to go 2 standard deviations and blowing through. So I'm playing for something collecting a fair amount of theta, but I hope it goes in that. If you look at those strikes, I'm exactly $50 wide, 315 to 365, Kev. I want a $25 move in either direction.
Yeah, so Kev, you basically are setting up a strangle, but you're trying to finance it by selling the near-dated options against it, but you still need to move to the upside or downside. And the risk, once again, is defined here at that $680 level, but you do need to have a move. Now, this one can be a mover, but we also still have relatively high implied volatility. But if you do see a breakdown one way or another, especially to the downside here, you would be able to capitalize and profit from this trade. Now, Kev, I want to kind of kick it back to you. Let's say that you have a $60, $70, or even $80 move to the upside or downside. How do you manage a trade like this, especially knowing that you do have some short strikes financing along call and long put?
One negative, a calendar spread has a lot of utility because it's forgiving and it costs less than some other more aggressive spreads. But yeah, you don't want a big massive $80 rally or an $80 sell-off because that would be too much. Now, it wouldn't go to zero right away, but it wouldn't do much. And so you have to be a bit nimble. But a gap, if you're playing for a gap in this and a big gap outside the 1 standard deviation move, this is one that wouldn't fit that scenario. So I'm looking for a more tame move. $25 either direction is right at that. Now, it's a forgiving spread. You've got big, wide break-evens. So it's relatively forgiving, but you certainly don't want 2 standard deviations. You don't want a $50 or $70 move in either direction. 20, 25, 30, that would be perfect for this trade, Diane and Kev.
All right, good stuff, guys. We have got cash tags coming up. We've got our eye on the consumer through the lens of housing. The team from Lifefolio will be along with new sentiment data on Home Depot. Stay right here on Schwab Network. Fast Market will be back after this break.
Howdy, fuddly.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I was little. Nothing gets in. Using credit cards to do anything and everything. I ended up with $20,000 in credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the SIBO. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Andy Swan, co-founder of Likefolio. We are taking a look at Home Depot today. It's good to see you, Andy. So Home Depot, we've got earnings coming up. The stock has been certainly challenged so far this year. There's obviously concerns about the housing sector. Talk to us about what your latest sentiment data shows.
Yeah, it's, when we look at Home Depot, we have to look at it in a basket with Lowe's, and that's where the comparison really gets really interesting because they have a very different mix from each other. Home Depot very much relies on the pros, on the contractor business, et cetera, while Lowe's is much more, 75% plus is do-it-yourself, people at home taking on projects. And what we're seeing at Likefolio is that both of those trends are somewhat muted, but the do-it-yourself customer is a little more resilient than the contractor at this point, simply because there's not as much activity in the housing market, and so people are staying home. They're staying with the home that they have a very low mortgage rate with, and not turning over homes as much, which gives contractors less business to do, and consumers more to do inside of their own home. So one of the things that we look at very closely when we talk about Home Depot is the web traffic. And one of the surprises for us last quarter was that web traffic at Home Depot was up considerably, even higher than Lowe's, kind of the same setup as we have this quarter. But Home Depot actually recorded less transactions year over year, and only really got to a positive sales number because of price increases. And so one of the things we dug into and we found is that a lot of Home Depot's web traffic is actually people standing in Lowe's or doing price comparisons with Lowe's. And so a lot of times the Home Depot web traffic is actually a proxy for foot traffic at Lowe's, which is counterintuitive, but makes sense when you really think about consumer behavior. And so we think that same thing is happening now. We think that there's more transaction volume growth, more foot traffic in the Lowe's stores because of the do-it-yourself home renovation theme going on, and they're price checking against Home Depot, and Home Depot just isn't winning those battles. So as we go into this week, we look at Home Depot as kind of a proxy, kind of a setup type of play because they report prior to Lowe's, and so we're hoping to see Home Depot report kind of in line or maybe even fairly soft numbers that gets Lowe's to sell off just a little bit going into its earnings print and giving us a little bit better entry as we think Lowe's is outperforming Home Depot in all the ways that really matter, and that is consumer foot traffic and transaction volume.
Andy, this is an interesting sector of the economy just because it's so left for dead right now. The chart on Home Depot looks horrible, right? You could say the macro is bad, interest rates are bad, housing is ugly. You could say the consumer is not into this part of the U.S. economy. You could say commodities are too high. Andy, I read, basically there was 10 analysts on this publication that I read. None had buys for Home Depot. Zero. It was 5 holds and 5 sells. And Andy, when this stock looks like this, when the overall analyst community is so incredibly negative, this is a stock that the bar is incredibly low for their earnings. And I think you're going to see remember, I haven't even talked about the future with a new Fed chair that is committed to lower interest rates for consumers and for small businesses. And so if he does that, if he's able to, Kevin Warsh can shrink the balance sheet and lower interest rates, all that energy, all that, momentum is going to go right to housing. And the number one housing proxy that I can find is Home Depot. Andy, your thoughts? Is this an overdone situation where any good news can send this stock higher? It's higher today on a little bit of anticipation, I think.
But I think it's low for good reason. If you look at, the Treasury markets, I think interest rates are being extremely stubborn here. And, when you look back at Whirlpool's earnings, a couple weeks ago, absolute disaster. This is appliance maker said, I think the CEO there said that this is the worst appliance market that the company has ever been through. And I talked with a few executives at a local appliance maker. They said the same thing when they used to be selling 2 units, a washer and a dryer to consumers. Consumers are now picking between one and the other and putting off the other purchase. And so there's no room for profit margin expansion. The tariffs are hurting this business dramatically, and that's just on the appliance side, but I think it's a good proxy for where the consumer is at, and that consumer that Home Depot and Lowe's used to count on for walking into the store and being able to upsell them into a higher profit margin item or getting 2 items when they thought they were coming in for 1. That is over, and now they're fighting over scraps at this point. And so I think that it's going to be difficult for Home Depot to come out with any really great news that would turn this around. I think you're right that we're neutral going into this print. We want to watch it and then play Lowe's from there, but I think it's going to be difficult for them to have any, superlative outlook going forward, because this is a very tough market for both of these companies and the housing market overall. So I think Wall Street's basically got it right here, and it's going to take a little time and definitely some lower interest rates to spark a resurgence in these names.
So, Andy, I'm glad you mentioned kind of your views on this one, because one, it seems like there are more headwinds than tailwinds for Home Depot right now. And I remember the CEO on their last earnings talked about the challenges of the housing market, and it's been challenging for some time. And it feels like the clouds aren't lifting on that horizon yet. So I'm curious to know if you have an actual earnings score on this one going into its results. And, is it really just going to take some time for this to turn around, given the sticky inflation that we're dealing with and interest rates still elevated?
Yeah, I think it's going to take some time, but I think that it's really just kind of dependent on your investment time frame. You know, if you think of the next 3 months, 4 months, maybe even 6 months as an opportunity as a long-term investor to get shares in companies while they're depressed, while Wall Street is throwing them out, these are phenomenal companies, and they will come back, and interest rates will go lower, and the housing market will pick up at some point. And so I think if your time frame is long enough,
People who hurt me are dead.
You don't have that much time to pick up shares, but I just don't think going into this earnings report there's any real urgency to get in prior to this report. I think the smarter play, we're neutral earnings score on Home Depot. We're slightly bullish on Lowe's, so we're looking at Home Depot as let's hope that they come out with the data and the outlook that we think they will. Let's hope it takes both stocks down a little bit tomorrow, and then we have an opportunity perhaps to get a better entry into a Lowe's bullish position into this earnings report, because we do think that they have the better story with the do-it-yourself customer.
All right, thank you, Andy. That's Andy Swan, co-founder of Likefolio, with the latest look at Home Depot. All right, Kevin, we got a lot of data there. The CEO said on their last earnings, he talked about consumer uncertainty, and this was a quote, that's still the #1 reason why people are telling us, our customers are telling us, they're not investing in large projects. So the large projects they're holding off on. That seems to line up with some of the data from Likefolio. Your final thoughts, Kevin, before your example trade?
In my trading career, what I've noticed is that really good companies get beat up over time. They don't have a great story, and Home Depot's story is not great. However, it's any good news. When the sentiment is this negative, anything that they say could send this stock higher. That's the way I look at this. All the discounts, all the bad news, I think it's priced in. Like buying a fixer-upper house that is priced as a fixer-upper house. And so that's the way I see Home Depot. So what I looked at was something with not a ton of risk, a risk-defined trade. I looked at the expected move, only about $12, and if they do come out with good news, I think the stock could move past that $12 on the upside. So what I looked at is something a little different. I went to the 1 week 320 call calendar, and that's trading around $1.05. It might even be trading closer to $1 now. So it's not a big debit. That's all you have at risk. But if you're right, and this stock goes to $315 or $320, you've got a multiple winner on your hands. And so what I'm thinking is the bad news is all in. Andy confirmed the bad news. And like I said, the analysts I read, none of them, zero, were bullish. I'm taking the contrarian view that in this case, any good news is going to send this stock higher, like it's already up today slightly. So I looked at a 1 week call calendar spread trading just over or at or near $1 that gives you some upside potential here, Diane.
All right, good stuff. As call calendars approach there for Home Depot, which has its quarterly results to give us a read of the consumer and the housing market. Thanks, Kev. Coming up to break down, we are crossing over to TJX, parent company of TJ Maxx, Marshalls, Home Goods. You know it. You stopped at all those places for another read-through on the consumer. We'll be right back.
Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network is available anytime, anywhere, on any device for free.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in my family be vulnerable.
I hate waiting.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
The armor keeps the world out. The lance does
Real-time
the
access,
rest.
data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at SchwabNetwork.com.
goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Can't tell if I taste metal or blood.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Has destroyed its memory.
I'm Dean, and I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We've got our eye on the consumer all week with a slew of retailers set to report. Shares of TJX are higher today ahead of the release of its quarterly report card. Analysts are expecting the parent company of TJ Maxx and Marshall's to post earnings of $1 per share on an adjusted basis. Revenue is expected to approach $14 billion, which would be up from $13.11 billion during the same time a year ago. That's time now for the breakdown. Joining us for that, in case you were wondering if we're out of Kevin's, we're not. We have more. We've got Kevin Horner, Senior Manager, Trading Services, Charles Schwab, joining us for a look at the chart for TJX. Kevin Hinks, Kevin Green, and now Kevin Horner. If you want a job at Schwab, your name needs to start with Kevin. I'm joking. All right, so let's get into it, Kevin. You're looking at the chart for TJX today. You've got to look at the 90-day first. Walk us through what we should be paying attention to there.
Yeah, happy to do so, Diane. Always good to see you again. So we've got a little bit of a range established here just in the last 4 to 6 sessions. And that range is one we're trying to break out of as we speak. So TJX has rallied into this downtrending 200-hour exponential moving average. That's the line I've applied to the chart here in blue. It happens to coincide with that downtrend off of the mid-April peak we see on this chart. So there's an area of overhead resistance at around 151 to 152 that, if cleared, could give us an opportunity to pull this even higher. Now, what's notable on that potential here, the potential for that move, is the volume point of control over the last 90 sessions here, 90 days, excuse me, which is at 156 or just shy of it. So that represents an area that bullish traders may look to target in the short run if this is a bounce that continues. So what we want to see on this hourly bar chart is to move through that 200 EMA around 150, 140 right now, and ultimately through 152, that horizontal forward support, now potential resistance. So that's kind of where we are on an intra-period basis here in the short
term. Let's zoom out to a longer term chart. You've got a 1-year chart. Walk us through what you noticed there.
So a lot of traders here, Diane, look to that 200-day simple moving average as a validation of a longer-term trend. That's exactly what we pulled back to. So you've got 3 to 4 sessions beneath the 200-day moving average on a closing basis. Today it comes in around 150, actually 149.5 at the moment. But ultimately, what we're seeing is a great candle following a test of that horizontal support and the 200-day moving average. You'll notice down below we've got RSI moving out of oversold conditions, so you could be looking at this as a potential for a bounce spot. Now, the trader on the daily look here probably thinks about proper risk versus reward. Downside limited to the green line, under which traders would possibly move on from this trade. It would make a lower low. Matching lows in the grand scheme of things in a broad long-term uptrend, matching lows are fine. It's what we don't want to see are the new short-term lows. And so working against the green line as an area of support, stop orders potentially beneath that, maybe long puts to protect the position beneath that, but ultimately under that level changes the confidence of the bullish trader. So it's good from a risk versus reward stance at this point for the bull, but as always, we have to set a plan for the trade, know where we would look to take that off. So that 158 level above represents a fair bit of resistance, and the 20-day moving average today at 154, again, could still be resistance. Remember that 154 was kind of important on the intra-period chart as well. So plenty to get to on TJX. There's a lot of price levels of potential potential both support and resistance on this one.
Price levels on the chart. Price is over at the TJ Maxx that's nearby here. Thank you, Kevin. That is Kevin Horner, Senior Manager, Trading Services, Charles Schwab. All right, continuing our Team Kevin coverage. Let's bring back in Kevin Hayes for the example trade purposes. Kevin, I don't know how I got a job here. Maybe I need to change my name to Kevin Nitsa. All right, your thoughts before your example trade on TJX.
Names excluded, I think there's a lot of positives here. A lot of the reason that this stock has sold off lately, they're at their last earnings event, they gave pretty conservative first quarter guidance. And so the stock is about $7 lower than where $7 to $8 lower than where it was when their earnings came out last time. So, but like Kevin said, it's held the 200-day moving average. So it looks fairly like a pretty good setup. And the trade down economy that we find ourselves in, commercials, TJ Maxx, and Home Goods Canada, Home Goods International. This company, if Walmart does well and people are trading down, they're probably trading down here as well in terms of apparel. So overall, I think that I'm looking for a more bullish paper money trade here in a company like TJX. So what I looked at is, again, 1 week, buying the May 29th, 150 call right at the money, looking at the expected move for earnings. Remember, their earnings don't come out till Wednesday. It's about $6.50. That could still move before, and the stock could move before, actually. I'm buying the 150, 157 and a half called diagonal. Now, this is similar to a calendar spread as we're buying the May 29th, selling the May 22, but the difference is there's that embedded vertical spread in there that just gives this more teeth, gives you about a 31 delta on this trade, Diane. It still is risk defined to what you pay, but the trade-off is you pay a little more. So about a $7.50 call diagonal. I put it in about $2.95, trading about $3.05 now as the stock has ticked a little higher. So something right around $3 for a $7.50 call diagonal, Diane.
Okay, so it's risk defined. I like the max loss there on this example trade there. What else should traders keep in mind about this example trade?
Well, it's a bullish trade, so it's risk defined. If it doesn't move up towards the 157 strike right away, you could just extend duration into the next, the May 29th expiration and turn it into a vertical spread. Obviously, the first choice you have is to always close the trade. If you're profitable, remember, if it doesn't go to 157 and a half by Friday, that strong expiration is going to go towards zero. And so that it could expand that way, or it could expand by the long option moving higher. So a lot of good news, a lot of good things to do here, but make no mistake, this is a bullish trade, Diane.
All right, and that lines up also with, we've got some analysts with increasing conviction around TJX today. JP Morgan Chase boosting their price target to 174. They've got an overweight rating. Truist is initiating coverage with a buy rating, and they've got a $175 price target on TJX. The stock higher ahead of its results, better by almost 2% today. That's going to do it for us today on Fast Market. I'm Diane Kinghall alongside Kevin Hayes. Our thanks to Kevin Green and Kevin Horner. Attack of the Kevins today. Download the Schwab Network app. It is available in the App Store and tune in 24/7 on SchwabNetwork.com. Stick around. We've got Next Gen Investing with Alex Coffey and Ginny Horn coming up.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people. I survive. You can just feel all the excitement around getting to learn a new topic.
Some of you want to do everything face-to-face with you and 400 or 500 people. Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction.
As I
I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we have to teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Your team has destroyed a turret.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Aw, she's got your smile.
Carl.
Yep. The #1 brokerage here to welcome your new little dependent.
Actually, we invest with Schwab now.
They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps regenerate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the market. Watch live on Schwab Network,
Joy, unceasing and forever.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes,
Next.
Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Great power behind this smile.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends. Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you practical implementation using our platform.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to The Wrap. I'm Jenny Horn, taking you through the biggest market moves, standout headlines, and the sharpest takes from the Schwab Network team. If it moved the markets, we've got you covered. Let's dive in.
So we came off the lows, the S&P 500 just rounding out the day on the line to the downside, particularly off the back of President Trump saying that they were going to hold off on a scheduled attack on Iran, which was expected to come tomorrow. So that's where we sort of saw a move. Just in the last hour, we saw oil coming off a bit, so were yields. I mean, the 10-year was at 462 when we started this show. It's at 460 right now. And then, as I mentioned, that certainly helped stocks lift a little bit here, but still underwater for the NASDAQ 100 as well, down around 0.5%. And really a lot of the drag was coming from the chip names as well. They continued to track lower today, an extension of the Friday losses, as we mentioned, particularly in that memory cohort. Pretty much all under pressure today. Some heavy selling, particularly names like Micron, SanDisk, Seagate, Western Dig. A lot of this is being attributed to obviously the concerns around the hit to production and shipments that a potential Samsung worker strike could have on the broader industry. So there's a lot of attention on that right now. But of course, the chip trade being something that had been pretty crowded, as we know, and people saying was due for a bit of a pullback. What was encouraging, as we've mentioned, we did see a rotation into softwares today. The IGV actually ended up over 1%. So technology was 1% lower on the day. As we mentioned, more of a defensive type of trade kicking in here. Staples were higher to the tune of 1.5%. Communication services were also up 0.8. Discretionary was lower on the day as well. You had Tesla down almost 3%. Amazon eking out just a fractional gain there. In fact, among the Mac 7, you had Google, which was just on the line to the upside. It came up the highs as well. Then you had Microsoft that was really flip-flopping throughout the course of the day. In fact, started the day off higher, came off a bit, and then once we got the Sam Altman, Elon Musk news and that whole sideshow, as people have been describing it as, once that was removed, we actually saw a little pickup in Microsoft as well, remembering that that had been named as a defendant in the suit. So that's what happened with the Mac 7 and technologies. Utilities were slightly higher, so was real estate, up 1.2%. We're getting pending home sales out tomorrow for more of an information and update, but obviously speaking to a lot of real estate guests today, the situation doesn't look like it's improving all that much, although we got home builder confidence coming out today by the way of NAHP, and things are picking up just at the margin. Financials were up 1.3%. Energy, as KG pointed out there, 2% higher on the day as we continue to see WTI and Brent tracking in triple digits here, and healthcare was up on the day as well, 0.4%. So let's bring Marley and KG back into the conversation. I'm just wondering what you made of the chip trade, KG, because I'm just wondering, it's all very well that when technology seems to be rallying, we say, oh, the market doesn't care about Iran headlines. But when technology is down, we see the sensitivity. Well, what does that say about semiconductor stocks?
Well, I think it's, obviously, when you look at the memory names, they did have a very strong showing over the last 3 weeks, 4 weeks. So a pullback is not out of the ordinary, and a lot of these stocks can come back and retest their 20-day moving average and continue to move higher. And the technical bull trend is still going to be in place. What you did see on Friday was really a liquidation type of moment or a distribution moment for this industry, and it continued throughout today's session. Now, there has been a pair trade that I think it's really simple. We had hardware catching a bid when it comes to the semiconductor trade, especially memory, and you had individuals selling off of the software trade. And if you kind of look at it, at least for today, hardware was down, software was up. IGV is up about 1.2% in today's session, and I think if that, the sell-off in the semiconductors continues, I think the software sector is going to see positive inflows, and I think it's really simple like that. I mean, it makes it a little bit harder for the S&P 500 to continue to advance because it's been a really good weighting, positive weighting for the S&P and the NASDAQ, but at the end of the day, I think there's just a roll-off of that pairs trade, and it seems like there's a simple fix for it. Once we have an equilibrium in this market, then we'll probably see it settle out, volatility coming in on both industries, and then we kind of assess where we go from here. But I know the headlines when it comes to the shortages and not being able to fulfill orders and then potential strikes is really, causing a little bit of a stir, but I think this is more just a profit-taking level more than anything, a reason to sell if you will.
KG, you just highlighted if once we get the equilibrium, I mean, I guess I wish you had a crystal ball to tell us when that's going to be, but obviously something that potentially could upset that equilibrium or throw us continued off balance is we've got NVIDIA coming this week, and I've had several guests say to me that they think once we hear from NVIDIA, we are setting up for the sell in May and go away. Everyone's just waiting for that, and they're sort of pushing it down the line. As you look at the technical setup for both NVIDIA and for the broader market, what are you seeing there? Are we perhaps in for a macro correction? The sell in May is just coming a few weeks after May started?
Well, I think if you're looking at NVIDIA in the last 3 earnings announcements, it has not been bullish for equities. And in fact, if you look at NVIDIA 7 days after they reported earnings, the stock has been down. And so I think the market's probably preparing for that type of reaction as well. I'm not sure how much of that is going to have an impact on the memory names. It seems like they're kind of trading in their own lane at this point. And there's a lot of traders and investors that are kind of questioning how far we can go from here. So I think the market's just kind of bracing for NVIDIA to report beat both on the top bottom line, increase the revenue guidance by $5 billion once again, and really the market probably either stay where it's at or maybe drifting a little bit lower if you're looking at NVIDIA. And to be honest with you, the premium sellers going into those events have been the big winners in the last couple of quarters, and I would not be surprised if they're going to be the winners moving forward here. Outside of that, I think the bigger risk that you have as far as a sector standpoint is actually financials, which had a really good day today, up about 1% or so. If you're looking at the longer-term time frame chart, it does appear that it wants to kind of break down and have a pretty decent correction. It just depends on how much that's going to have a broader impact on the equity market as a whole, or if that's going to be an isolated event.
Yeah, it's interesting just around the timing of the chip sell-off. I mean, I heard one view that maybe it was because we got nothing from the Trump-Xi meeting. So, I mean, basically it was just nothing left to change as far as, no reason to buy. Because, I mean, we got no deliveries from any tech deals or, neither president walked away with anything really substantial. So maybe, as you say, just obviously the run-up that we've seen some profit-taking here. How are you thinking about the macro with these higher yields right now? I mean, people have been saying like 450, 460 is kind of the danger zone on the 10-year as far as damping the move. And there seems to be a very big debate out there as to, whether this stops the AI and the CapEx trade in its tracks or not right now, KG. And I don't suspect you have the answer, but I mean, how are you putting all the macro data together right now?
Yeah, so the interest rates moving higher I don't think has an impact on CapEx spending from the hyperscalers. They have enough money in order to kind of compensate, and a lot of them are really not. I mean, some of them are buying and hitting into the debt markets, but I don't think it's going to have a meaningful impact when it comes to the long-term spend and the trajectory. And that's kind of evident by Google Alphabet that did raise their CapEx guidance by about, $25 billion or so, and I think, $15 billion of that is just because memory prices went higher. I mean, they have the cash on hand in order to spend to cover. For the 10-year, you can make two thoughts about it. I think if you look at the daily chart right now, 4.63 has been an area of resistance for us. If you're looking at that back in May of last year, that was kind of the top. I think there's probably why you did see that rotation trade into financials, into staples, and even some utilities for that matter, outside of the NextEra and Dominion deal here. There may be a near-term top when it comes to the 10-year treasury. You would hope so. And if not, if we see a breakdown, unfortunately, it can accelerate very aggressively. And I think the macro data, especially if you're looking at China, is a little bit concerning. Industrial production coming in lighter than the street's expectations, retail sales coming in lighter than the street's expectations, pretty much at levels that we saw back in 2022, 2023. And that's not really a good sign. And you are still seeing some demand destruction in the energy complex because prices are moving higher, as well as the supply chains are kind of being broken up here. So I think we're probably at that inflection point over the next couple of weeks here where the data might turn over and look a little bit worse around the globe, and that might also put pressure on yields, not only here in the United States, but around the world. We're seeing that already in the UK, any yield right now for any major economy is moving higher.
KG, we're going to have to leave it there for today, but really appreciate you being with us for the closing panel today. Kevin Green.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Last year, my dad had a big shock to see this person that I've always seen as a force in the family be vulnerable. Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? Been with him for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free. SchwabNetwork.com. And how strong are you?
Sometimes, you know,
beyond you.
Same goes for where you invest. Level up and invest smart with Schwab.
Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to The Wrap. I'm Jenny Horn. It's time now for the Big Three.
We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, will take us through the charts. Here to take us through the trades today, Scott Bauer, CEO of Prosper Trading Academy. Scott, great to have you back on the show. Would love to get your thoughts on, how we're kicking off a new trading week here. We opened the show a bit of a mixed bag, but now we're pretty firmly in the red here.
Yeah, overnight there was some caution. We were in the red, and we got back in the green a little bit here on some of the news that was coming out geopolitically, and then just over the last half an hour or so, we got some news that Iran's response probably was not what the markets wanted to hear, and here we are. But we're in the red, but the VIX is pretty unchanged. I mean, it's up a tick or two here, so everything is still hinging on what is the news coming out of the Middle East, especially since we're really at the tail end of earnings season. We do have some big retailers, but it's really what's happening geopolitically.
And Scott, before we dive into the big three, I have to check on you. Are you okay? I see we've got an ouchie.
Yeah, it's all good. You know, it's one of those accidents with a dog. It's all good.
All right, as long as everybody's doing well, we can dive into big three here. Circle, your first pick. Circle down on the day, a little more than the markets. We're down at more than 4% right now. So why Circle?
I really like it for a couple reasons. Technically, it just had a golden cross. What is a golden cross? That's when the 50-day moving average crosses above the 200-day moving average. So I really like that here. And you know, ever since its IPO, it's had its ups, it's had its downs. But I really like that. So I'm going out about a month, and I'm buying just a simple call spread, the 115, 125 call spread. When I sent this to you, it was trading around $3. It's probably slightly less right now. I do like the upside there, but of course, you know, this one's pretty tied to crypto.
Yeah, of course. And as we look at Bitcoin, you know, lower, they can't seem to recapture that 80,000 mark. Every time it pops up, I look, but I think we're right around 76,000 right now. Rick, as you take a look at Circle and the technical setup here, I see we have some converging lines.
Yes, that's true. More of a symmetrical triangle type of pattern. But what I wanted to focus on first, around 124 is where I had a line marked here, similar to that 125 strike area. The reason is it was a repeated low point during that range-bound area, around where we hit some trouble here in terms of forming new highs, and that's around where we topped out again more recently. So the intraday highs were a good bit beyond that point, but in terms of lasting progress above that boundary, that is a notable point where things seem to struggle. So anyway, so we do have our symmetrical triangle type shape. We've retreated back within the confines of these two lines, one going down across the highs, one going up across the lows, beginning here at 49.90, which marks our 52-week lows. Some other horizontal areas to consider: 98 and 89. The reason why, the gap level, and then repeated highs here, giving us this supported zone that we've tested a few times recently here. So that could be an area to watch if we do start to slip once more and move further toward the downside. So when we do look here at our RSI study, our relative strength index, which gives us a read on momentum, things have started to increase to the downside more toward the bearish side. We had our lighter colored red line there, giving us a more gradual slope. More recently, though, we have a sharper trend line that you could have drawn here. However, it's a little more complicated because you also could have this upward sloping area too. So kind of matching our price activity of bouncing around in this increasingly narrowing range. However, this is often the precursor to higher volatility. Low volatility can give us these explosive breakouts when one of these well-defined boundary lines is eventually breached. So kind of interesting that we had those upside tests before retreating here. So if you were interested in more of an upside bias here, the 140 level stands out based on our volume profile study because that represents where our volume node, our heavy trading activity, would start to kind of dry up. Things pick up again here, 180 to 210. If we were to look to the downside, 8450 stands out as the point of control, the heaviest trading area of all, lining up with our supportive zone we mentioned earlier.
Yeah, and Circle really outperforming the broader crypto space despite that tie. As we look at crypto over the last 6 months or so, which is close to when we saw those all-time highs, it's more than 40% higher, whereas crypto, depending on which you're looking at, anywhere from 15 to 50% lower. So Circle tied to it, but performing well despite some of these downward moves we've seen in the crypto space. Your next pick here also performing well, Scott. We're talking about TJX, very resilient in this K-shaped economy, and we've got earnings coming on Wednesday. Is that why they're part of the big three?
Absolutely. This is absolutely an earnings play, and I love these lower end or budget sorts of retailers, like you said, especially with this K-shaped economy here. So I think TJX, Costco, Walmart, and we got Target, you know, these stocks are all in vogue right now. But what I really like about TJX is it trades right down to its 200-day moving average going into the earnings print here. So I'm buying what's called a diagonal call spread. So I'm selling this week's up above the 155 strike call. I'm buying next week's 150 strike call. So two different expirations, a 150, 155 vertical call spread, and I'm looking to pay about $2 for that.
All right, and as we look at the technical setup here for TJX as we go into earnings, Rick, I see we've got a downward sloping channel, but what are you seeing in terms of the levels you're keeping an eye on?
Sure, and 150 stands out to me as well. The reason why is it was a notable low point from our previous price history. That's about where price is today, though, so that would be possibly an interesting breakout point to consider as well. As you said, though, Marley, a downward sloping channel type shape. We have our highs here, 165.82, connecting these subsequent highs in this area. If you were to duplicate that line and put it across the lows, it fits up pretty cleanly here to give us this channel type shape. So this is something you can use to try to project potential support or resistance here. Other than that, not a whole lot of clear areas of potential support, or excuse me, resistance to the upside here. You could say around here near 153 marks another low, but up here 158 to 160 roughly, another resistance zone here characterized by our repeated stopping points for price to the upside and consolidation here. So that would be one area possibly to consider. 146 also to the downside, another notable low point here. That's also where we bottomed out here more recently. When we do consider our moving averages that we follow, we can see that our 251-day EMA, our long-term exponential moving average representing 1 year, was supportive recently. Price is now bouncing above our 5-day weekly EMA in dark blue, which comes in near 149. So if we were to keep moving upward, the next test would be our 21-day monthly EMA 153 in teal there, which would also represent a breakout from our channel. RSI improving here. We saw a little bit of bullish divergence where even as price made a lower close, RSI was trending upward. We have also find ourselves out of the oversold area now. So if you had a bullish outlook, look for this trend to keep continuing and push above that 50 midline. So now our volume profile shows that we are still within this relatively smaller node here between about 147 to 151. If we keep moving upward, the point of control, the heaviest trading area of all, comes in at 156. That's our thick red line here. So that would be the area that both we want to recapture and eventually push above. That's the most pronounced area of heavy trading for this chart here as we see it based on this study.
All right, and of course, we'll hear from TJX companies on Wednesday ahead of NVIDIA. But as we move to your last pick here, we've got momentum really on the side here for Palo Alto Networks, particularly over the last month or two as I look at the chart. Take us through what this is your last pick in the big three.
I love this stock. I absolutely do, but I think it has run too far too quickly. Earnings are on June 2nd, few weeks out, so this position is not earnings related. This will expire before that. I am selling a slightly bearish iron condor, meaning that I'm looking for a bit of a consolidation here ahead of earnings. So I'm selling next week's 225, 220 put spread on the downside, and next week's 250, 255 call spread on the upside. I'm looking to collect $2.50 for that. So again, a little bit of a bearish tilt to it just because the call spread I'm selling is closer to being where the stock is right now, and just looking for some consolidation going into earnings.
All right, Rick, and as we look at the technical setup here as we go into earnings, those coming June 2nd for Palo Alto Networks, what are you seeing? I mean, there's that run-up we were talking about.
Yes, 8 days of pretty strong gains that we've seen here, topping out at 247.98 for our intraday highs. The area between 220 and 225 also stood out to me. That's because that was around where we had these old prior highs. That's where we had not really much of a pause, but that if we were to pull back, that would be a notable area to look for potential support. So the speed and ferocity of this run-up hasn't really given us a lot of other opportunities to look for potential footholds. One other area that stands out is just this gap level all the way down here near 191, but that's far away enough at this point that probably wouldn't enter the calculations for most folks. So when we do look at our moving averages, our 5-day EMA in dark blue has mirrored our very rapid ascent here. 234 is where that one comes in. If it were to be breached to the downside, that lines up with our channel boundary line here, so that would also give us a bit of a confluence there. When you have more than and one technical indicator lining up in the same spot, the eventual possible breakout can be stronger then because there's multiple sets of eyes watching different indicators that are aligning here. RSI, our measure of momentum, showing quite a strong reading, 86.5. Anything above 80 is characterized as being a fairly extreme rating. And remember, RSI only goes from 0 to 100, so 86.5 is not something that you see too commonly. That's a very strong momentum view for this indicator here. Now, just to focus on the past 3 months of our volume activity to give us a more granular look, we can see that there's a small pocket of activity here, 230 to 240, another node here, when we had this peak around 210 to 215. Finally down here, 193 to 200. Those are the more notable trading activity areas based on this very short-term time horizon, trying to make more sense of support during this extreme push to the upside.
All right, right now Palo Alto trading up almost 1% today, 245.08 as we look at them in advance of their earnings again coming up the first week in June. Scott, I want to thank you for being with us today for Big Three. Scott Bauer and of course Rick Decatur, lead market technician, for taking us through the technical.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation trends and geopolitical risks. Smart, fast, and always live from Wall Street to London. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
My legend remains unwritten.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the market in real time. This is Schwab Network. Subscribe to schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week at schwabnetwork.com
And on all your favorite streaming services.
Schwab Network. Available anytime, anywhere on any device for free.
Mom, when my grandparents moved here, did they know what our family was?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Spit in the eye of evil.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading.
Greatness.
No matter the hour.
Arsenals turn to gaze upon the stars, and his hungers only grew.
You're watching The Wrap. I'm Jenny Horn here in our Chicago studios. Let's keep things rolling with a look at what's driving today's action. Let's stay in tech
and go deeper into our tech spotlight and look at the industrial sector of trade. Joining me right now, Christopher Davis, partner, Hudson Value Partners. I'm so glad you're with us. When we think about the industrial semiconductor space, talk about what kind of names. I mean, I know we're getting into analog devices. I mean, what are we looking at here?
Of course, Nicole, great to be with you. So Analog Devices is one of the names, but also old and long-standing semiconductor companies like Texas Instruments, NXPI, Monolithic Power. These are the types of names that not only make things that go into automobiles, the Internet of Things, the types of semiconductors and chips that you'll find in your washing machine and your dishwasher, but also are now starting to have some exposure to data centers and to the hot trades out there. And the way I think about it is, Analog Devices, even though it sounds like it's a bit of a boring name, it takes a lot of analog to make today's digital world run. A lot of capacitors and resistors that underlie everything.
So when you see all the down arrows today, what is the outlook for this space? Where are the opportunities?
The outlook for this space, I think, is a bit challenged in the near term. We've had basically a near vertical move since March 30th, since the ceasefire, and when the chip stocks of all types, whether it was the most high-tech in NVIDIA and Broadcom, as well as some of the more basic chips out there, they've all had incredible runs up. Analog Devices, as the company that really reports last in the group, I think most of the good news is probably baked in, so unless they come out with something really surprising, I think it would be a win to see the stock basically hold its ground from here. Looking forward, the earnings growth is there, and the earnings growth is the biggest driver of the expansion of these names because the PEs are generally falling for most semiconductor companies out there. The question is whether or not investors are really going to believe it, because semiconductors are a deeply cyclical industry. Some cycles are longer than others, and right now we're in a bit of that boom phase, but over time you were just talking about SanDisk and not really being able, or Seagate not being able to increase capacity enough in time to meet this demand, so they're probably not going to do it. That's great evidence of the cyclicality of this industry. So right now we're in a boom, and I think investors are starting to remember that.
So with analog devices and Texas Instruments, you said they benefit from U.S. manufacturing basis, and that Texas Instruments showed a very strong growth in the data center part of the business. Do you expect that to continue at least for Texas Instruments?
I do expect it to continue for Texas Instruments. The U.S. manufacturing is important, Nicole, especially because, right now with the Strait of Hormuz and the helium shortage, and the U.S. is also a big supplier of helium out there, those companies that can manufacture things in the U.S. right now are at a bit of an advantage, especially if the conflict continues. I think with Texas Instruments, data centers are a part of their business, and with all of these semiconductor companies right now, anyone who's bought these stocks within the last 30 or 45 days is banking on big data center growth and not really thinking about the rest of the business. I think the rest of the business is in good shape. I think the data center business will continue to grow, but will it be at a rate in order to justify the vertical move?
You also mentioned the war, whether it drags on or, what the key elements may be, such as helium. If the war goes on, what?
If the war goes on, I think that it's going to affect not only the high-flying semiconductor names, the most high-tech, but also the low-tech as well. Because if the war drags on and we don't have some of these basic materials that are necessary, companies like Taiwan Semi and the other fabs and manufacturers are going to have to reduce production. And if they reduce production, they're probably going to favor the higher-end chips first, what they can make the most money on and are the most profitable things. But it also means that sales for all these companies will tend to go down, because if things aren't being produced, you can't book the sale, and it could create a real slowdown within the industry. So right now we're in this really tough spot. AI trade seems unstoppable. The pace of technological adoption keeps growing, but there are some real constraints we could face in the physical manufacturing world if the war and some of the supply chain disruptions that we're facing don't unkink themselves in the next 1 to 3 months even.
Yeah, and I think about, I guess there's no beneficiary. Sometimes one man's problem is another man's, good luck, right? I mean, it's not like, you're saying that the industry slows, sales will slow. It's not like one particular tech company, maybe one that makes stuff at home, may do better than others. Could it be that story or no?
I I think U.S. manufacturers like Analog and like Texas Instruments and perhaps even to some degree Intel might be able to hold on longer. But the global tech and semi-supply chain is so interconnected that there are some specialty components that you can't put the whole system together if you don't have. So unless the whole global supply chain is firing on all cylinders, I think you'll start to see those disruptions.
I understood. Christopher Davis, great to see you, partner, Hudson Valley Partners. Appreciate it. Thank you.
Take shape. I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, fundamentals, shaping the market in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Your inhibitor has been destroyed.
First day, so.
Sometimes
Next. Try it again.
you could have done better.
Please.
Rampage.
Same goes for where you invest.
Double kill.
Level up and invest smarter with Schwab.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna
Your
be sick.
inhibitor has been destroyed.
We have to buy that now.
Schwab.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a break level for this stock. And that could certainly be short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
I need only 3 weapons. Water, muscle, mind.
Sometimes
Turn to gaze upon the stars.
you could have done
And his
better.
hunger's only growing.
Same goes for where you invest. Level up and invest smarter with Schwab.
Killing spree. Godlike.
Welcome back. I'm Jenny Horn, and this is The Wrap, your source for today's key stories, standout moves, and smart market insights.
Our panel is ready, and so we're glad you're with us. John Deal, Managing Director of Capital Markets, Post Oak Group, and Matt Maley, Chief Market Strategist at Miller Tabak and Company. Great to see you both. Thank you so much. So, John, I'll start with you. Some of your thoughts here on the big picture. When you think about some of the things we've gotten in, such as retail sales, and China's economy has been facing some pressure. Why do you think that is, and what's your outlook?
Good question. Chinese economy has certainly been facing some pressure. I think that has a lot to do with just the structural issues within China. So the domestic demand within China has been softer than anticipated. I think that's a big part of their strategy, their kind of national strategy, has been to try to use their exports as a catapult to get to a stronger domestic market. That hasn't been playing out as well as anticipated. They have some major differences between issues in their country versus ours, versus Western economies. I think it's primarily related to real estate. The Chinese don't have the ownership and the depth of credit relationships with the average Chinese consumer that you see in Western markets. I think that's largely put a cap on their domestic consumption.
Before I get to you, Matt, I just wanted to follow up. Because there were in your notes, John, you talked about the strategic question of American businesses who may want to do more business there or some business in China. How do you participate? How do you protect those opportunities that you create there? And you said China is not, it's less about being open wider for business, and it's less about goodwill and more about maybe they need more economically. you know, but can a U.S. company feel really company set up there and feel confident?
I think that's probably the question that's been on people's mind, particularly in the last 6 years since COVID.
Okay.
Property rights in China are fundamentally different than the United States. I think when you're looking at balance sheet exposure within the Chinese economy, the risk has become a bigger signal than the potential reward.
Yeah. And Matt, what did you think? I mean, it was certainly enjoyable to see the parade of CEOs and U.S. dignitaries. What were your thoughts? I mean, does it mean some more deal making in the future? And what does it mean to you, Matt?
Well, I mean, it was good that the dialogue seemed to be open and friendly, or as friendly as it could be, and that he brought, the president brought so many high-profile executives with him, but the results weren't particularly concrete. Not that people were expecting it to be some major breakthroughs, but just you can just look at what's happened to the tech stocks, especially the chip stocks, over the last couple of days since that summit came to an end. They've come down pretty hard. Now, of course, part of that is that they've had this great run over the last 6-7 weeks, and of course, we've seen interest rates move higher, long-term yields move higher as well. But part of it does have to do with the fact that not a whole lot concrete came out of it. So there's still some questions there.
And there's no doubt that part of the strategy of the U.S. is to squeeze China to a certain extent. I mean, we haven't been taking in the imports, even though we have an import imbalance. It's not coming from Chinese goods. It's coming from elsewhere. And so that's part of the story. A name like Baidu had an up arrow today when we think about investors and Baidu and Pinduoduo and Tencent. I had a guest on the other day who said, I really only like, they had been in Alibaba and got out. And right now, he only really liked Tencent. I mean, what do you tell investors who want to invest in Asia? Should they keep China in or ex-China? John, what do you tell them?
That's a fun question. I don't think you can X China, but I think the major growth right now has been diversifying away from pure China exposure. If you're looking for growth opportunities, it's going to be it's more primarily in Southeast Asia at this point than in China. So it's a key component of the global economy for sure, and I don't think there's anybody thinks that's going to change. But the key story right now to me is diversification and opportunities primarily in Southeast Asia as well as elsewhere.
Right. I mean, when I said ex-China, I mean, I wasn't making it up. There are actually ETFs that do invest in Asia ex-China in case someone just doesn't want Chinese stocks in particular. And I'm on neither side of the story, but you did talk about a lot of the opportunities in Southeast Asia and such like that. Final thoughts here, Matt, when we think about what goes on going forward. You still have the Strait of Hormuz blocked. I don't really see it opening right up right away. China has agreed to certain things like soybeans, more agriculture, in addition to what they had agreed to last fall, and have even agreed to get some U.S. oil and Boeing planes. What do you think of all that?
Well, again, that is definitely positive, and let's face it, the situation from now compared to where it was 15 months ago in the first quarter of 2025 is dramatically better. So that certainly helps out. I mean, the other thing, though, too, is we have to remember that one of maybe the issue that China kept pounding away at is that, hey, U.S., do not get involved with our issues with Taiwan. And even we saw when the president said we had made some final decisions on that, arms sales and things. So that's going to be one we're going to be watching very closely in the coming weeks and probably more like coming months. But it was definitely a side. It wasn't so much of as a sidebar. They kept moving in and out of that issue, but it was one that's something that China is very, very focused on.
That's right. I'm sure they are. And the president didn't really show his hand when it came to Taiwan. He gave them the wait and see type of thing. Great to see you both. Really appreciate it. John Deal, MD, Capital Markets at Poso Group, and also Matt Maley from the Maley Report and Chief Market Strategist at Miller Tabak and Company. Thank you. data-driven analysis from U.S. equities to global.
They shall tremble
Network
at my
connects to that. Watch live. Subscribe free at SchwabNetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done
Summoner's Rift.
Same goes for where you invest.
I do not
Level up and invest smarter with Schwab.
I must become
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
There is no hiding from the light.
Connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Aw, she's got your smile.
Carl.
Yep, your #1 broker here, walking new little dependent.
Actually, we invest with Schwab. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies, and Schwab helps me generate
all this Schwab is everything you need is making you cranky.
Does somebody need a map?
Invest your way with Schwab.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Glad you're with us. I'm Jenny Horn, and this is The Wrap. Let's get right back into the market stories shaping the trading day.
Let's focus on Baidu, dubbed China's Google. Let's take a look at the chart over the last year. As you can see here, it's been a bit of a bumpy ride. We did see a nice recovery last year, came off a bit. We have seen very much a bit of a more enthusiasm coming from investors more recently, particularly off the back of the news that it's going to be spinning off and listing Dual in Shanghai and Hong Kong, Kunlun Xin, which is its chip arm. So a lot of excitement around the fact that this company is obviously going to try to capture some of that enthusiasm we've seen for, obviously, NVIDIA, Cerebras. Take a look at that last week. So obviously the company reporting earnings before the market opened this morning. So we are seeing a nice reaction to that. So that's the focus of the morning trade. Let's get out to Marley Hayden just for the details of this. What did we learn from Baidu this morning? Good morning, Marley.
Good morning, Sam. Yes, we learned that their first quarter results were a beat, which always is good. But we learned that the street cared a lot more about the growth of their AI cloud business more so than they did their ad business, because we saw a sharp decline in their traditional ad business, but some very impressive growth across their AI cloud business. So let's go through the numbers, see what the street was happy with and what may be sending up some flags. But again, Baidu in positive territory today. So most of those flags are being looked at but ignored or watched. First quarter results came in better than what was expected. EPS came in on an adjusted basis, and I put it into dollars for us. $1.67 per share for the March quarter. That beat analyst forecast looking for $1.60. Revenue came in at $4.7 billion, which was just slightly ahead of the $4.6 billion that was the consensus, despite falling 2% year over year. That standout figure, though, was with no question, this AI cloud infrastructure revenue climbed 79% overall to $1.3 billion as these enterprise customers are really ramping up their spending on Baidu's computing services. GPU cloud growth also jumped 184%. So really seeing some impressive acceleration in those spaces. Chief Executive Robin Lee saying that their AI-powered services exceeded half of Baidu's general business revenue for the first time, calling that what was referred to as, quote, a clear signal that AI has become the core driver of Baidu. Now, as we look at the shift, though, and why this matters, it's because the ad business is starting to flail. Their legacy search advertising business, like you said, often compared to Google here. We didn't see this with Google. We thought search might be suffering. It's not. We are seeing it reflected here in Baidu. It's long been its primary revenue source, but it continues to deteriorate. The online marketing services revenue fell 22% to $1.8 billion as the broader Chinese economy weighed on ad spending. So was expected, but it decelerated a bit more than I think was expected. But the acceleration in the cloud AI space accelerated far more than anyone was expecting. So it's sort of offset there. Baidu, of course, was one of the first major Chinese tech companies to pivot towards generative AI. They had their ChatGPT style chatbot named Ernie. They launched that back in 2023. So one of the earlier adopters, ChatGPT, coming out the end of 2022. And it's up against fellow huge tech names like Alibaba, WeChat, parent company Tencent, to win users for its AI offerings, as well as enterprises for its cloud infrastructure businesses. But Sam, as we saw today, it seems to be doing okay, trying to maintain and grow its market share as we're seeing that really impressive growth across AI cloud. Year to date, just marginally up for Baidu, 2.6% with this move. And we are seesawing a bit this morning. We are slightly below the unchanged line now, but better than expected metrics, however, raising a bit of maybe a flag of caution on those ad numbers.
Yeah, I mean, it had that first mover advantage, but now it's trying to play catch-ups in this whole AI space. But it just goes to show how competitive this space is over in China, particularly when you've got the Barbers, the ByteDances of the world. Marley, thanks so much for getting us across the details of this one. Let's trade Baidu now with Charles Moon, stock strategist, Prosper Trading Academy. Very good morning to you, Charles. Hope you had a nice weekend. Just walk us through an example trade on Baidu.
Yeah, so, I'm looking very closely at the 133, 132 half level. This is a pretty key inflection point in the near term. This is where Baidu actually gapped up on May 6th, and it's actually tied in with those lows. It's also at a key technical level because if it breaks down below, it can actually roll down as low as around 125. So this is an imperative level in the near term. The AI growth story, Wall Street tends to love it, and there's a difference between seeing that growth story in a small cap name versus a very dominant and very prominent name such as Baidu. So if the markets could firm up, I think that's going to be an important aspect here, and Baidu could maintain above this 133 level. I'm looking at the May 29th 140 strike. Now, I would play this pretty tight with around a 40% stop because, again, if they lose that 133 level, there's a lot of downside. But if it's able to maintain, just trying to get back to the highs of the day isn't really that big of a mountain to climb. The markets firm up. This stock should firm up. Again, Wall Street loves the AI growth story. And yes, there's a little bit of a drop off in terms of ad rev. That was a bit disappointing, but seeing the, exponential jump is really important for the AI segment. They're becoming and maintaining a big player. This is also something that could help their autonomy business, something that was a big jumper or driver for the stock previously. And so kind of the all of the above story, that AI growth segment is a really positive one in my opinion. And if the U.S.-Chinese relationships only strengthen and firm up from here, this is just going to help boost Chinese stocks in general.
Yeah, absolutely. And they are considered relatively cheap compared to their US peers. I mean, this one is trading at what, a forward P of 17 times. So, I mean, attractive valuations. If you want to see them execute and pull it off, and they can do that, I mean, obviously it's a different way to play the whole AI theme as well. Charles, really appreciate it. Thanks so much for joining us and walking us through your exact trade on Baidu for us today. Charles Mooney, stock strategist, Cost Trading Academy.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
An ally has been slain. The celestial realm awaits.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Fire if I must.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
Options, earnings, the volatility plays. We bring decades of trading experience to every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at SchwabNetwork.com.
Welcome back to The Wrap. I'm Jenny Horn. It's time now to spotlight the biggest stories and takeaways across the market.
Lucas Downey is with us, co-founder of MoneyFlows.com. And there are folks who just remain optimistic despite any headlines across the world. And when they see the dips in tech, they buy. Are you in that camp, or what do you say?
We're definitely in that camp. It's good to see you, Nicole. If we rewind the tape back to late March, you remember everybody said the AI trade, it was getting ahead of itself and people were calling for the end of days. I'll give you a really cool stat. If you go from April all the way until this past Friday, 35% of all of the inflows that are in our data were in the tech sector. So, I mean, just a complete risk-on rally left a lot of people in the dust. Now, a lot of that is not all tech stocks. stocks, right? We know there's a lot of software names and things like that, but really the data center trade continues to just gather steam. The first stock I wanted to highlight is Broadcom. This is ticker AVGO, and one of the reasons we like this company is because they continue to beat and raise and then offer this amazing guidance. And you know, if you look at their sales estimates, right, by analysts for 2026, it's at 103.6 billion. If you go out 2 years, it doubles to 203 billion. So these are the types of companies that we want to be levered to, and not to mention just tons and tons of money is rushing into this stock, and it's one of the highest rated names in all of our data. So it's a great name to play this data center theme.
Yeah, you also had AMD and Corning. Since we're talking about your top 3 AI data center stocks to own right now, let's get to those as well. Why AMD?
Well, AMD, I mean, the story is you got to follow earnings, right? That's why we become investors, right? So that we can share in those future profits. AMD, they just have one of the best guides of this earnings season, where they said that, you know, revenue was going to be at 11.2 billion at the midpoint. This is way past the 10.5 billion by estimates. The company noted CPU and AI demand acceleration. I don't know about you, anytime I hear the words acceleration, I get excited. And then whenever we look at the data center segment sales, so these are just the sales related to that segment, 2026, it's at 30.3 billion. If you go all the way out to 2028, this is a multi-year story. It has just ramped up to 75 billion. This is a stock that has more than doubled in a little over a month, so it has been really good to investors. And then again, what's the main verification? We want to just look at money flows into this stock, and it has been a one-way train higher. So we really like Advanced Micro Devices longer term. The third name, if we get into optics, right? People love photonics. Corning is ticker GLW. They just announced this monster multi-year deal with NVIDIA. That is a key trait you want to see for, you know, great companies in the data center space. Again, if you just look at that segment that is optical communications, okay, and you look at the sales estimates for 2026, it's 8.35 billion. After that deal was announced with NVIDIA, if you go out a couple years, it's ramped up to 13.36 billion. You want to see that stair step higher. But why do we really like this? It's all about the flows. This is one of the rare companies that over the past year, since money flow has been going in, has not had one outflow. Very few companies can say that, and it's got a multiple top signals, what we call them outlier signals in our data. So these are some of the best names to play this multi-year theme in the data center space.
Yeah, and you say own the companies with the gushing earnings, and that's how you started this segment when we were talking about this. What about NVIDIA this week? I mean, I have to ask you your thoughts. I know AMD, obviously a big competitor, not NVIDIA. So let's talk about the Wednesday earnings. What are your thoughts on NVIDIA? Are you a fan more or less than you used to be? What's going on with NVIDIA in your mind?
I think NVIDIA, we would all agree, is the GOAT stock. I mean, they just continue to be best of breed across the board. I think it's going to be a beat and raise. I think it's going to be a crowd stunner. I think a lot of people are going to be like, oh my God, AI is here to stay for a while. But I think the reason that we choose some of these other stocks is because we're seeing this huge catch-up trade that you're seeing across the market, right? Where NVIDIA kind of was like the crown jewel of everybody's portfolio. We're starting to see a lot of, you know, bench warmer stocks get the love. You see Intel, you're seeing AMD. Everybody's kind of getting that fire. And so for that reason, it just seems like an easier way for investors, portfolio managers to add a little risk to some of these other stocks, older stocks that people kind of forgot about. But NVIDIA is a fantastic company. I don't really have anything negative to say about that company at all.
You said the build out for data centers has years to go. So these names, Broadcom, AMD, Corning, I guess, and many others probably, have the base for AI to continue for years. I mean, you must think it's still somewhat in the early innings then.
Yeah, I mean, if you remember, you know, last year we were talking about the memory bottlenecks, and, you know, a lot of people thought that was crazy. You start to see what's happening, and now it's starting to hit photonics and starting to hit some of these other areas. So as these data centers, they continue to build out all over the country and all over the world, we're going to face more and more bottlenecks. And that's where the big opportunity is. And I think a lot of investors, they think of stocks in the old way. They think of sectors, right, for decades. It doesn't move like that anymore. Everything is thematic. Everything is frontier-based. And so that's how you can stay ahead of the curve. And yeah, there are multi-year runway for what's going on in the AI build-out. It is not stopping anytime soon.
Understood. When we think about the trip that happened in China, what were your thoughts? I mean, you had many of the tech CEOs going to meet in China. Were you expecting something different, or did you think it was a good show or good look in some way?
I think it looks good optically. I think as long as everybody's coming to the table and bringing all their concerns, their thoughts, how they can work together. I think if anything, the news is going to be ultimately positive once, we get, everybody on board. But, this is more of an earnings story. It's more of where is money going, right? It is all going into all these pockets. And I think all the leaders across the world are going to figure it out. I mean, this thing is big. This is a huge technological revolution like we haven't seen in a long time. I know I sound old enough, but it is hard to find a negative when you think multi-year on what's going on.
I thought about your long-term stat when it goes to the data center segment sales. And for 2026, estimated to reach $30.3 billion and accelerate to $75 billion in fiscal year 2028. So that really from $30 billion to $75 billion, right? More than double.
Yeah, and I think the really interesting piece is if you go back to their recent earnings, we're talking about AMD right now, is it went from about 65 billion to 75 billion. So you want to see that hockey stick where analysts are just behind the ball, and that is the theme that we continue to see for the past year plus. Is all of these analysts, right? They're great, but the earnings growth and the revenue growth just continues to get higher and higher. Just about every earnings report that we hear, you just hear better and better visibility. You just hear higher numbers, more partnerships, and so for that, I think these numbers could still be low.
I also thought in the last earnings report from NVIDIA, we were listening for certain words like trillion and photonics, because photonics meant that, monetization was going to come sooner. Are you listening for any words or specific numbers in the report from NVIDIA on Wednesday?
You certainly want to keep your ear out to photonics. There's a couple of companies that that we're not talking about today, smaller cap companies. Once they get that anointing, once they say that, hey, we are a photonics stock, that is going to be something that people are going to be zeroing in on. That's one of the hottest themes in the market, one of the biggest themes that we continue to talk about with our customer base. So I will be paying attention to that. Let's hear what they say about memory. A lot of people worry about margins. They worry about how much supply that they have actually captured. I think that is a big key theme, but those are two of the areas that I've been focused on for the report.
Lucas Downey, great to see you. Really nice having you on the show this morning. Really appreciate it. Lucas Downey, co-founder of MoneyFlows.com. Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X @Cam_Vardis and connect with me on LinkedIn or Instagram.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like like Schwab. Everything investors need, all in one place. Come again? At Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm going to be sick.
Wings of immortal thread.
We have to buy that.
Lift me from mortal temptation. Invest your way with Schwab.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. Could certainly be a short to
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
The fallen will never rise again.
Sometimes, you could have done better.
Has been slain.
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to the Wrap. I'm Jenny Horn. Let's now take a closer look at what stood out and key lessons for investors from today's trading session.
It's time now for our 360 round. For that, let's bring in our panel to discuss the earnings from Baidu. Joining us now, Ted Thatcher, President of Bright Lake Wealth Management, and Brendan Kavanaugh, Chief Strategy Officer at Defiance ETFs. Ted, we'll start with you today. What's standing out with you most on the report that we got today? We saw some sort of seesaw action in response, but now we're about 1.5% higher.
Yeah, Marley, when I look at Baidu, I think that there's a value story for investors and a growth story for investors. On the value side, fundamentally, when you look at the sum of the parts here, you're looking at a company that trades at a valuation of $45 to $50 billion. They have $40.5 billion just on their balance sheet of cash. They have a huge stake worth $8.5 billion on a hot, growing AI chip company. At that point, you're saying, okay, am I getting the rest of this company totally for free? They have a growing, of course, AI business. That's, we saw the numbers come out today. That's going in the right direction. We saw their Apollo Go robo-taxi platform growing really well. And so that's the growth story. And then again, on the value side, I think that some of the parts are attractive.
And Brendan, you called this a low quality beat. Do we have Brendan? Okay, wonderful. We've got Brendan. Okay, Brendan, you called this a low-quality beat. What specifically is sending up some warning flares for you?
No, at the onset, that's what I thought. But then diving into the call and looking into the numbers a little more, I was actually a lot more pleasantly surprised hearing what Robin and hearing what the CFO had to say about everything happening. In the AI revenue space, right, that inflection point was massive. But when you think about the growth in the cloud computing space, everything they mentioned from Apollo Go, I think that there was a lot that they, you saw this as the trough quarter, and I think that they built a lot of upward momentum into expectations going forward.
And Ted, you described this basically, and I want to get it right, as basically getting Google plus OpenAI plus Waymo for free. Do you think that we are undervaluing Baidu right now because of some of the numbers and how they broke down?
My devotion.
I do think that there, again, is a value play here for investors. Look, they love to be compared to Google. Who in their shoes wouldn't want to be compared to Google? I'm not trying to say that they are, the mega cap company that Google is, but they are the primary search provider providers still in China. They don't have the market share. Theirs is more like 50 to 60% in China. But when you look at that, again, that's still a lot of revenue coming to them. Well noted there. They hit that AI inflection point. 52% of their revenue coming out of this quarter is AI driven now. But when you pair that with a huge growing Apollo Go platform up this quarter, huge number year over year is 120%. Peaking rides, 350,000 a week in some cases. And then that's to say nothing of their GPT equivalent, Ernie 5.1, which might not be at the front of the frontier models, but even from a performance standpoint is in that group. And so I think that from an investor's standpoint, those are attractive things, of course.
And Brendan, when we look at companies like Alphabet or Microsoft who've been rewarded for this pivot to AI infrastructure, why do you think it is that we aren't seeing the same treatment in Baidu yet?
I think, again, we both mentioned that this is this specific time where we're seeing the AI revenue manifest itself. So the inflection point is kind of the bottom of where things can go from here. So I'm super optimistic that the stock itself will get the treatment that the others have gotten. Obviously, we talk about AI infrastructure a lot. There's a ton happening there. That is really the move and where you want to be shifting your focus when you're looking at expanding revenues and capitalizing on the opportunities in the marketplace right now.
And Ted, I also want to talk about Apollo Go, because that's a huge part of this business as well. They posted more than 3 million fully driverless rides in the quarter. At what point, if ever, does the market start valuing that business independently from Baidu's core operations?
It's really interesting because I do think the Google comparison is a very interesting one here, because they also have Waymo, of course, within their holdings, and they don't really get much credit for it either. I think that we just have to see a bigger and bigger market share. So obviously the Apollo Go platform is expanding. They're in Dubai. They're looking at different parts of Europe and Switzerland. And so I think fundamentally, as we see that take across, the globe more, they'll give more and more credit for that. It's just honestly not quite there yet. And so again, as they expand globally, I think that that's where they'll start to get more credit. And fundamentally with their valuation, to Brandon's point, I think is well made. There is a little bit of geopolitical, pressure on them. In China, you just don't have the valuation capability that you do in the U.S. A lot of Chinese companies might get 50 or 60% of the gas, if you will, that the U.S. market has. And so I think they're fighting a little bit of that there. Again, though, at this price, at this valuation, I think there's value for investors.
And let's talk about value here too, Brandon. I'm looking over your notes. One of the biggest themes in your notes is the balance sheet here. Baidu sitting on nearly $40 billion in cash against roughly a $47 billion market cap. Why do you think the market is still assigning such a discounted valuation? Is it that we needed this quarter, this inflection point quarter, for things to change?
I mean, I really do think, this becomes a proof of concept. Like, again, $40 billion of cash just sitting there. Think about, the things I've made, or that I brought up, or that Ted's brought up, what they as a company can do with it, right? That's dry powder when they can be expanding, everything in the AI space. They can fund, stock buybacks, dividends. They can really lean into things in that Apollo Go segment that their competitors couldn't necessarily do, all without having to tap external markets. I think that's just a huge tailwind for the stock itself. And I think, again, goes back to that whole proof of concept situation that I think the market was waiting to hear from this earnings result. And I think over time they'll benefit, or the stock itself will benefit from this being hopefully priced in going forward.
All right, I want to thank you both for being with us to take a closer look at Baidu today. At those results, we saw that AI growth, impressive ad sales lagging in that report, but the market looking through it, we're now up 2 1/3% for Baidu this morning. Thanks to Ted Thatcher from Bright Lake Wealth Management and Brendan Kavanaugh from Defiance ETF. Really appreciate you both being with us.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can
can set up her college fund.
I'm learning about grading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need. It's making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome to Summoner's Rift.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Noxians aren't the heroes.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Cut me enough and I'll split your head open.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Really is Schwab Network. Available anytime, anywhere, on any device.
Stood in my way is dead.
How's it going?
First day, so.
Sometimes, you know,
Next.
Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'll finish this fight.
You're watching The Wrap. I'm Jenny Horn, and before we close things out, here's a final look at the day's biggest stories and what's next on the horizon.
Let's keep the international focus now. Joining us is Richard Flynn, Managing Director over at Charles Schwab, UK. All right, Richard, very good morning to you. Thanks for joining us. So let's get across this political uncertainty over in Downing Street right now. Obviously, you've got Keir Starmer trying to hold on to his leadership, remaining defiant in the face of this potential challenger now coming from this Manchester Mayor, Andy Burnham. But I think, what the markets really want to gauge here is, whether this is a similar story to what we've seen with Liz Truss, as far as the reaction with yields pushing higher, a weaker pound as well, and just the overall market thinking around what this could mean moving forward for the UK. Just fill us in, Richard, this morning.
Yeah, g'day, Sam. It's great to be back in an era of more political uncertainty, as if the United Kingdom hasn't had enough of it over the last decade. You talk about Liz Truss in 2022. It actually feels just like yesterday that the bond markets really reacted fairly violently to that mini budget in 2022, and it's taken a number of years to try and restore that credibility, the stability that the UK has been renowned for over the last 100 years. But we're in a different world now, and political parties are fragmenting. The political order in the United Kingdom has changed pretty much irredeemably since Brexit, and Brexit still hovers over this leadership issue. And I think what bond markets in particular are looking at is, okay, if Andy Burnham does succeed in becoming an MP and then in successfully launching a leadership bid, what will that mean for the UK's policy around the EU and reversing Brexit? It's a very, very complex path that he is going to be walking, and I think it's going to lead to continued instability in the UK over the coming months, and that's not a good thing, particularly given just how hard it has been for the UK, particularly with the issues of Ukraine and then this recent Iranian war to deal with international geopolitical instability. And so, more to come, unfortunately.
Obviously, we check in with the UK gilts market on a daily basis, obviously, because it's just so headline-grabbing at the moment with these sort of multi-decade highs. As you say, it very much is the political uncertainty that's driving that, which might be somewhat different to what we're seeing in places like Tokyo and even here in the US to some degree. But what are the broader ramifications of that? I mean, as far as that kind of market reaction, I'm thinking just on broader equities and the rest of the global market.
Yeah, well, in simple terms, this is a consequence, really, of the low growth environment that the UK has been in for the last decade. It's not a million miles away from Japan's experience in the 90s and what that led to in terms of investment, capital investment, and confidence in that market. And the United Kingdom has struggled to retain the confidence of global investors. In recent years, the last couple of years, there's been a slight sea change, and we have seen investment in the United Kingdom increase. We've seen better performance from the FTSE. But what you're looking at now in terms of the UK as an investment opportunity is a bit of a barbell economy. People are looking at what appear to be attractive valuations on UK companies, but then offsetting that against the low growth environment and the potential instability of the political class in the United Kingdom. And so that does make investors think twice about the UK as somewhere to put their money.
All right. And how are you thinking about this sort of global bond sell-off across the board? I mean, obviously, this is something we're seeing from, as we mentioned this morning, to London to Frankfurt. I mean, obviously different reasons. Obviously, you've got the fiscal situation in places like Germany as well. But how are you thinking about that in the context of central banks looking to hike rates perhaps sooner than obviously the market is thinking the Fed will, trying to respond to a very serious situation in your neck of the woods?
Yeah, I think there's an argument that the Bank of England and the UK in general is a little bit of a leading indicator in this field. You know, if you look at central bank policy globally, the UK has held rates at 3.75. It's unlikely to cut this year, the inflation is proving very, very sticky. Unfortunately, it's and you're considering the impact of the Strait of Hormuz and what that is going to mean ultimately in terms of the supply chains, etc. And so the Bank of England is amongst central banks really leading the way in just being a very, very in cautious mode. It doesn't appear that it's giving no indications that it's planning to pivot anytime soon. And so investors look at that, and the bond markets look at that and think, okay, well, what does this mean for freeing up cash? You know, what will this mean for consumers? What will it mean for the housing market, and ultimately for the growth potential of both the currency but also the economy? And so, the UK as a central bank is caught in a pretty sticky situation, and fundamentally, as a cautious institution, it will likely retain that cautious approach rather than pivoting anytime soon to try and accelerate growth in the economy.
Yeah, it's a rock and a hard place, isn't it? Hey, Richard, thanks so much for jumping on. It's really useful just to check in and see what's happening over there. Across the pond, Richard Flynn there from Charles Schwab, UK.
And that's a wrap on today's market action. We're back every trading day with more insights, moves, and everything that investors need to know. Download the Schwab Network app and stream anytime at schwabnetwork.com. I'm Jenny Horn. We'll see you again tomorrow.
Welcome to Schwab Network, where real-time market coverage plus expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
But what is it? They're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
The show is built for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live, headshots.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I have a question for you. Sure. Hey, Granddad first.
Granddad hadn't had a Schwab before. He really started young. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me through the journey, helping with the estate distribution. The two grandchildren, planning for their college education. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
When steel crashes against steel.
So what is unique about Schwab coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platform.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals. Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
Relatable, practical, clear, understandable, hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat and show you. We want to engage with you outside of the
So we shall see. You have different comments because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
These sigils are a reminder. Screw my sigils.
An enemy has been slain.
Welcome to Market Matters. I'm Marley Caden. Each week we are stripping away the noise to focus on the big picture economic themes that could have a place in your portfolio. Today we're heading to the final frontier. For years, the space economy felt like a tomorrow story, too speculative, too capital intensive, and frankly, too hard for the average investor to access. But that is changing. NASA just brought its Artemis 2 crew home after historic lunar flyby, and reports are swirling that SpaceX has confidentially filed for a $2 trillion IPO. But since it remains private, the big question for investors is where do you actually get exposure? And with Artemis's recent success, what other areas of the industry will become investable? Joining us to break it all down is Andrew Channon, the CEO of Procure AM and the man behind the UFO ETF. We'll discuss what's real when it comes to space, what's actually investable now, and where this industry could be headed next. Andrew, thank you so much for joining us today for our first episode. Last we spoke, I said I could talk to you for a lot longer about the space economy and the space sector, and now we're getting to do that. So I'm so glad you're with us, and what perfect timing too, because let's just start with the potential giant elephant in the room, the SpaceX IPO. We've now got these reports that they have their confidential filing for their IPO coming up in June. If that does go through with a $2 trillion plus valuation, does this immediately move space into a core sector for institutional investors from what I think many view now as potentially a thematic niche?
It certainly feels like it. We're talking about a company that, if it IPOs at those levels you just mentioned, will instantly be one of the largest publicly traded companies in the world. It would be the largest IPO ever. And those are some pretty big metrics. And then on top of that, you're hearing from index providers around the world about finding ways for early inclusion of this name into these various indices. So to the extent that, everything plays out like we just discussed, SpaceX could be a major part of investments for people, whether they're in a broad-based investment index or something even more specific like an ETF like UFO.
And right now, if you're trying to get some space exposure, you're often buying one of these legacy defense names where space may be a small portion of their revenue. If we see SpaceX go public, does this become the tide that lifts all boats, or do you see it more as sucking the air out of the smaller players?
It's tough to say. If you look at what we've seen across the space industry, especially the publicly traded space industry, since the early rumors in December of last year to more kind of formalized discussions about what to expect in the months ahead, we've seen the broader publicly traded space industry has been very positively exposed to these rumors and this news. And so, is that investors using the currently publicly traded names as a proxy? It seems like the pure play names have done pretty well, especially compared to some of the more broad-based defense names that people were more traditionally would relate to the space industry maybe a decade or more ago. And some of that raises other questions. So if SpaceX does raise $75 billion or so, where will that money be deployed? Will it be focused on beating out Blue Origin for lunar landers? Will it be focused on building out orbiting data centers or some of the other projects that SpaceX has already been involved in? Would they look to acquire strategic companies? And if that's the case, many times you see that a certain industry is potentially in play for M&A. Sometimes that does, like you said, have that ability to raise all ships. And that could be potentially some of what we're experiencing over these last few months as far as the recent surge for some space companies. We've also heard other players such as Sam Altman claiming back in December before the SpaceX report came out that he was contemplating trying to build his own potential rival to SpaceX, and would do so either by building organically, partnering with existing space companies, or acquiring them. So to the extent that an IPO that wasn't necessarily on everyone's radar only 6 months ago is something that's coming down the pike, this might be something that pulls demand forward for potential M&A or for other services that could be provided by some of these space companies.
And Andrew, you bring up a great great question there. What are they going to do with that capital, and how are they going to deploy it? So when investors finally get a look at this S1, what are they really investing in here? Are we looking at an interconnectivity company that also happens to own rockets? Is this Starlink? Or are we looking at Starship? Is this a transportation company that has an internet side hustle? Or whatever.
Or is it an AI company? Or is it something that possibly merges with a electric vehicle company? We do not know. And I think investors are very excited to learn more. And these are all things that, hopefully will play out in the near future so we can get a better understanding of what investors will ultimately be getting once this company does IPO. But, from what we've heard, different conversations, even looking with XAI and Cursor and the recent announcements that we've been hearing about. This is still a space company. There's communications, but when you look at kind of the way that the world has evolved over the last many years, I mean, space affects pretty much every publicly traded company out there today. Whether it's part of their key focus or it's something that helps enable those companies to achieve the various goals that they're trying to do, space does touch pretty much everyone everywhere these days. And so what a space company may look like in the future may be completely different than what people have considered to be space companies historically. But these various capabilities could provide numerous potential revenue streams for the company. That said, some might have much more kind of a longer term path to profitability. Some might require a lot more upfront investment to build these out. Some might be pretty close to profitability. So by having many different areas, certainly it exposes you to more risks and potential capital needs, but maybe it also helps provide a smoother, less volatile path for the company in the future as well. And so we're going to need to see what those drivers are, what those expenses are, what the cash burn is, and so much of that becomes apparent once you have a company that's public instead of private. So I think you've got a lot of people that are running their own numbers and formulas to determine what is this worth and what is this. And one of the things that our index provider will also be doing is trying to determine revenues from space versus non-space revenues, because we do have this space ETF UFO. It looks to have pure play space companies, but it also does classify some companies as more diversified names. So it will be very interesting to see what bucket SpaceX falls into once they do IPO. And I wouldn't be shocked if we hear more news leading up to that IPO as well, as far as other potential areas that this company may look to deploy capital.
I have about a dozen follow-ups to everything you just said there, but I'm going to go all the way back to the very beginning of that answer where you said, or is it an AI company? And you mentioned orbital data centers. Now, Elon Musk had called those a no-brainer, hinted that we were going to shift data centers into space. Then we heard reports that in the confidential IPO filing, those may not be as commercially viable as initially we may have been led to believe. So I guess the question for you is space AI really a plausible concept, or are we just riding the hype wave here to juice up the IPO?
It's definitely plausible, and in my vision of the future, as we become a more spacefaring civilization, I think all these things are possible, and AI and data